All right, so hello everyone. Good morning, or good afternoon, or good evening, depending on where in the world you are catching me from. It's great to see so many of you here once again, and welcome to Black Market Day 2. As I mentioned yesterday, this is our ninth year running Black Market. It's the biggest event of the year for us, and of course, the biggest sale of the year. And a lot of people actually wait for this end of the year to grab our investing and trading courses and playbooks at the biggest discounts you can get for the entire year. Yeah. So I hope you caught our webinars yesterday. Yesterday there were two webinars. Did you guys catch my webinar? Yeah. So yesterday my webinar's focus was on understanding how to invest intelligently and invest safely in this AI revolution, the fourth industrial revolution, of which we are just at the early innings, right? And like I said yesterday, 99% of stocks will not go up in the long run. Okay, they may go up in the short term, but eventually they're not going to go up, right? And the majority of the gains in the market are made in the top what? 1% of the highest quality companies. And yesterday I showed you how do we identify these high quality stocks. We only want to invest in the top 1% when they are attractively priced, when they're undervalued. And there are quite a number of them right now in the market. And I call these stocks the tennis ball stocks. Tennis ball. Why? Because even when they drop temporarily because of a short-term emotions and manipulation, they always bounce back higher. There's tennis ball stocks. And we need to avoid the egg stocks because the egg stocks, 99%, they drop, they may never come back because they are, disrupted by AI, or they don't have much really profits to speak of. They are inflated by hype, right? So we talked about that yesterday. And if you missed my webinar, don't worry, there's a replay link that will be sent to you shortly, as long as you have registered for Black Market. And then also do catch Elson Chu's price action manipulation, where he talked about how market makers manipulate the markets every single day. If you saw the market going down the last week, what changed? Nothing changed. The businesses are doing very well, but it's purely market manipulation. So he explained yesterday how market makers induce retail traders to panic and sell at the bottom, and induce retail traders to get excited and buy at the top. And that's why they always lose money, right? So once you understand their market manipulation patterns, how do you trade alongside the market manipulator so that you make money with them? Okay. So again, all that was yesterday. Catch the replay. Watch it again if you have missed it. So for today's webinar, I'm going to focus on. Oh, by the way, let me just check. Can you guys hear me? Someone said they can't hear me. Can you guys hear me and see my slides? Okay, great. All of you can hear me. So if you can't hear me, check your volume on your device, or you may have to restart it for some reason. Yeah. Okay, cool. So today's webinar, my focus is on how I trade options and how I achieve and generate consistent profits every single year trading options, even in the bear markets. Okay. And how am I able to do that? Because the way I trade options together with Bang Fan Van, who is our options grandmaster, he'll be coming on right after me. You got to listen to him. He's my sifu actually in options. The way we trade options is different from the majority of retail traders, 90%, right? Now, those of you who know a bit about options trading, you know that most retail traders, how do they trade options? Majority of retail option traders, they focus on buying options. Buying options. How many of you have done that before? How many of you have bought call options or put options before? Okay. So most people, if they think, hey, the stock's going to go up, what do? They buy a call option, right? If they think the stock is going to go down, they buy a put option. Now, the trouble with buying options is that it's a very low probability system, okay? Because understand that options are decaying assets. So every day the option loses its time value, right? And if you buy options, I can tell you that in the long run, the probability of making money is very, very low. In fact, most people, when they buy options, they end up losing all their money eventually. When you buy options, once in a while you can make a lot of money. Okay, but in the long run you end up losing all your money. So it's kind of like playing the jackpot. If you play the jackpot or play the lottery, once in a while you hit the jackpot, oh, you make a lot of money, right? But in the long run, if you keep playing again and again, what happens? You lose everything back. That is what happens when you buy call options because the odds are against you. So what Bang Pham Van and I do is we do the opposite of everyone else. What do? We focus on selling options. Okay? Because when you sell options, the odds are in your favor. So we are no longer playing the jackpot. We are no longer buying lottery. We own the jackpot machines. We are the house. We are the casino. Okay? And was it always like that? No. So I share with you my own personal journey. So I first learned options over 19 years ago. And like most people, when I first learned options from the people who taught at the time, I learned to be an option buyer like everyone else, right? So I buy call options, I buy put options. And yes, I made money once in a while. It was very exciting. But every time I made money, eventually I'll lose the money again. So I made, I lose, I made, I lose. Eventually, I lost money. Okay. How many of you have that experience, by the way? Okay. And so at that time, I asked myself, I said, hey, if we keep losing money buying options, then who's making all the money? Who's making all the money? The answer is the people selling the options. They are the ones making all the money. You get the point? Yeah. And I remember there was one time I met with a group of I went to a karaoke with a childhood friend, and he happens to be in the banking profession. And he introduced me to some of his friends who were institutional traders from the bank, and they were trading options for the bank. Okay. So I thought, wow, cool, these guys trade options, something in common. So I was like talking to them during the karaoke, right? And I told them, I said, hey, yeah, I learned about options recently, and I'm buying call options, I'm buying put options. And they looked at me like I was a freaking idiot. Right? Then I didn't understand. I said, why are they looking at me like that, right? And they would look at me in a very condescending way, like you bloody stupid idiot. And I didn't understand why. And then it was later when my friend explained to me, because he's in banking, he said, Adam, the majority of institutional option traders, they all sell options. They do not buy options. Only idiots buy options. Only retail idiots buy options. And they end up giving all their money to the institutional traders that sell options. Okay. So that's when I had this aha moment. So I learned how to sell options after that, right? Then shortly after I met Bang Fan Van, okay, who had a very similar story. Let me, right? So when he first started, he also started buying options and lost all his money. Okay. And then he also learned to sell options. And then when we got together over 10 years ago and we chatted, we realized that we both came to the same realization that to make money consistently in the options market, you got to be a net option seller, not an option buyer. And it was then Bang who taught me a lot more of the techniques to fine tune my own skills. That's how I can do it consistently every single year. All right. So that's basically the gist of my little options journey. Okay. So, how many of you here have never traded options in your life? You have got no idea what I'm talking about. Okay, great. And how many of you have traded options before, but again, you have not been consistently profitable and you want to find out a way on how to do that? Great. So today I'm going to start sharing with you how to trade options the right way. Okay. Now, first of all, let me just a word of caution. Okay. When you first learn options, it can be a bit challenging. All right. Now, when I first learned options, I can tell you that I was totally lost. I was totally blur. Now, either I'm a slow learner or my trainer was not very good. Either one, right? I was totally lost. And it took me a couple of months to read the material again and again and again and watch the lessons many times before I got it. Before I was like, now I understand. Okay. So I didn't understand the first time. It took me a few months to understand it. Okay. Granted, I'm a slow learner, right? But once I understood it, it was a game changer. It transformed the way I invest, the way I trade forever. And today, I can't live without options. I can't live without options. I trade options almost every single day. And a significant part of the income I create from the markets are from options trading. Okay. So if you find this confusing at first, challenging at first, there's nothing wrong with you. It's very normal. Okay. It's kind of like learning to drive a car the first time. So when you first learn to drive a car, it can be a bit intimidating, a bit confusing. Must check my blind spot, check the rear view mirror. I have to step on the accelerator, right? It's like, oh, so many things to think about, right? But once you learn how to drive, what happens? You don't think about it. It becomes automatic, true? Okay? So what I'm saying to you is this, okay? Don't give up. Don't give up. If you have questions, ask. I've got my team of volunteers and coaches behind helping to answer as many questions as they can. Is that okay, everyone? Okay, good. So with that, let's get started learning how I trade options. Now, understand that there are many different option strategies. In fact, in our options training mentorship program, we teach a total of 26 different option strategies. Okay, 26. Yeah. Now, for today, I'm going to share with you about two of the strategies, which are my favorite, right? So, my favorite strategy out of many of them is actually in selling put options on the highest quality stocks. Okay, selling put options on the highest quality stocks. Now, some of you may ask, what's a put option? So let me explain very simply. A put option is an insurance contract. All right, I repeat that. Write this down. A put option is like an insurance contract. So what I do every day is I sell put options on very good companies. In other words, I sell insurance on good companies. To who? Who buys the insurance? Other people, right? So other people like other traders or fund managers, they buy insurance from me. Okay. So let me give you an analogy. Yeah. So let's imagine that there's someone who owns a house. Okay. Someone who owns a house here. And let's say the house is worth $1 million. And they are afraid that the house may catch fire because there are bushes nearby and the fire looks like it could come during the summer, right? So what do people do to protect their house? What do people do to protect their house? They buy fire insurance, right? Okay, so this guy buys fire insurance, and that is the same as a put option. Understand? So again, a put option is insurance. So he buys a put option. And when he buys the put option, he insures the house for, let's say, $1 million. So the $1 million that he insures the house, that's called the strike price. Clear? That's called the strike price. So once he insures the house, what happens? If the fire comes and the house burns down, he says, no problem, because I bought insurance, right? So I have the right to sell the house at $1 million. So even if the house goes to zero, no problem, I can sell it at $1 million because I have insured it for $1 million. That's called the strike price. Now, to buy insurance, must you pay a premium? Yes, you have to pay a premium, correct? So, for example, this premium is say $20,000 premium, and this premium say insures the house for 1 year. Now, who collects the premium? Who collects the premium? The insurance company, correct? They collect the premium and they insure the house. So if the house burns down, the insurance company will say, no problem, we'll still buy your house for 1 million because we insured it, correct? Okay. Now, question. What happens? Okay, so let me explain this way, right? So this is basically what I do. So I am like the insurance company. Okay, I am like AIA, I'm like Prudential, I'm like Great Eastern Life. I sell insurance on these houses. Now, in fact, how many of you in real life you buy fire insurance every year on your house and you buy car insurance? How do you do that in reality? Okay. And how many of you sometimes you get quite fed up because every year I'm paying the premium, and then I never get an accident because I'm a safe driver. I pay the premium, my house never burns down. And you're like, right, you just keep paying, right? Okay. Now, how many of you wish that you own the insurance company and you collect all these premiums from all these households every year? It's like, wow, free money, right? Okay. Now, what's the good news? The good news is you can do that. You can do that in the stock market, right? So that's exactly what I do in the stock market. In the stock market, I'm selling insurance, okay? And I'm collecting all these what? Premiums every year. It's like free money, right? Now you say, but Adam, what if the house burned down? What if the house really burned down? How? Then you have to pay $1 million for the house and the house is worth nothing, right? Okay, so here's my secret. Want to know my secret? My secret is I only sell insurance on metal houses. You see, this house made of metal, right? Okay, so what's the good thing about a metal house? A metal house cannot burn down. It may catch fire a bit, but after a while, the fire will go out and it will not burn down. Okay, I do not sell insurance on wooden houses. So wooden house catch fire can burn down. Understand? All right. So the analogy is that only less than 1% of houses are fireproof. They are metal. 99% of houses are wooden houses. They can burn down. Okay. So how does this relate to the stock market? Okay. So let's relate this to the stock market right now. So what happens is that in the stock market, there are a lot of, let's say, fund managers. And these fund managers, they own a portfolio of stocks. Let's say Amazon, Meta, Google, Tesla, all kinds of stocks, right? And what happened is that when they are nervous, so let's say, Trump is coming up with tariffs, or there's a Ukraine war. So these fund managers are nervous that, what if the stock price of my stocks, they drop, right? They are afraid of this temporary drop. So what do? These fund managers, they will buy put options to insure their stocks. Okay, so they buy put options. They are basically buying insurance. So when they buy this insurance, they have to pay a premium, right? Now, who collects this premium? Adam Khoo, me, right? I am like the insurance company in the stock market. So I collect this premium, right? So by collecting the premium, I am insuring all these stocks. That if the stocks drop, okay, I'm obligated to buy the stocks at the insured amount. Let me say, but isn't that risky? What if the stock drop and they don't come back? Right? Yeah. So again, what do? As you guys know, I'm very conservative. I'm very, very conservative. I only sell insurance on what? On the top 1% of, again, the tennis ball stocks. Remember? So these stocks, could they drop temporarily? Yeah, short term, they could drop temporarily. But because these companies, they generate consistent revenue, profits and cash flow, they've got strong economic moats, they always bounce back, right? So as long as I'm patient, they bounce back, I don't lose money. Make sense? Okay, so that is the concept behind how I do it. Now, let me go into the mechanics to explain more for those of you who have got no idea. But before that, let me just show you what kind of profits I generate, right? So this year, so far in the last 12 months, November last year to November this year, my first account, which I showed you yesterday, you can see the total. Now, when I sell options, I collect premium. Okay. So the total amount of premiums I collected is here, $743,000 worth of premiums. And then when I buy the options back to close the position, I have to pay $567,000. So 742K minus 566K, you can see my net profit is $175,000, okay, for this first account. My second account for the last 12 months, again, my sold options, I collect 418,000 in premiums. Then I buy the options back to close a position at 260,000 minus. So net profit is $158,000 for the last 12 months. So combined together, my combined profits is $334,000 in the last 12 months. Now, the question is, how much capital did I need, right, in order to generate 334,000 US in profit? Now, when you sell options, you need to use a margin account. You need a margin account, not a cash account, right? So my broker, Interactive Brokers, and Think or Swim, basically they block about 20 to 25% of buying power out of the notional value of the options. Okay, later I'll explain more about that, right? So for each account, my notional value is about $500,000. So combined is about 1 million notional value. But I don't need to have the $1 million in my account because the broker only blocks 20 to 25%. So my actual capital required is about $250,000 US, okay, for this year. So my actual return on the capital employed is 133%, okay, which is a pretty good percentage return on capital employed. Now, last year, 2024, January to December, my first account was $99,000 in net profit, and the second account, $93,000 in net profit. Okay, so the combined profit last year was $192,000. Now, some of you may say, but Adam, this year's a bull market. Last year was a bull market. What if it's a bear market? What if the market collapses? So when was the last bear market? The last bear market was 2022, okay? So in 2022, this is my account, right? This is 2022. In total, for the entire year, I made $250,000. This was a bear market when the market collapsed, all right? So that's why I say I've been making money consistently in both bull markets and bear markets. Now, if you think this is pretty profitable, this is no big deal. This is nothing. By the way, Bang Fan Van, who'll be coming later, he makes a lot more than me. All right, he makes a lot more than me. But of course, it's because he trades more strategies. I only trade 1 to 3 strategies. Okay, so I'm a bit more lazy. He's more hardworking, right? By the way, do you know who is the biggest options trader in the world for many years? Who is the world's biggest options trader? Do you know? Yeah, many people don't know. It's actually Warren Buffett. Yeah. So many people, they did not know Buffett trades options because he never talks about it. But if you actually read his annual report every year, you know that he does a lot of options trading. And just like me, he mainly uses one main strategy. What does Warren Buffett do? He sells put options on the S&P 500 index, and he sells put options on companies he wants to own. Yeah. So for example, many years ago, he wanted to buy Coca-Cola as cheap as possible, and Coca-Cola was selling at $50. So does he just buy it from the market? No. Does he wait for the price to drop to buy it? Not all the time. What he does is that he sells put options on Coca-Cola so that he gets paid premium every month, waiting for the stock to drop to the level he wants. So he's paid to wait for the stock to come to him. So in the end, when he buys Coca-Cola, he buys it at a very big discount. All right. So how does this work? Later, I'll show you step by step. During the great financial crisis of 2008, when the market collapsed, people panicked, right? And everyone was buying insurance on the S&P 500. What was Buffett doing? Buffett was the one selling all the insurance to these people. In fact, he sold a total of $4.9 billion of premiums. He collected $4.9 billion of premiums, right? And eventually, when the market rebounded, the insurance that he sold expired, and he pocketed $4.9 billion. Okay. So this really inspired me to be a insurance seller in the market. Understand? So for those of you who have no idea what's a put option, let me go through the mechanics right now. Ready, guys? So far, what I've explained, does it make some sense? Make some sense. Okay, cool. So what's a put option? Now, when you buy a put option, you are buying a contract that gives you, all right, the buyer of the put option, you have the right to sell 100 shares of a particular stock, let's say Apple stock, at an agreed upon strike price that you've chosen anytime before or on the expiration date that you have chosen. So let me give you an example, right? So let's say now Apple is selling at $250. Okay, Apple is selling at $250. So you decide to buy a put option on Apple at the strike price of $250. So what does this mean? If you buy a put option on Apple at $250 strike price, that means you have the right to sell Apple shares at $250 before it expires, which could be anytime, could be maybe in 30 days. So even if Apple drops to $200, the share price, you can still sell it for $250. Even if Apple drops to $100, you can still sell Apple at $250. Even if Apple drops to zero and goes bankrupt, you can still sell Apple shares at $250 because you have locked in the price. You have locked in the strike price. And you can sell Apple at $250 anytime before the expiration date, which, for example, is 30 days. Is that clear? That is when you buy a put option. Okay? So here's another example. Let's imagine that right now, there's a stock called Visa. Okay? And Visa is now selling at $280. And let's say there's a fund manager who owns Visa. And he's very scared because, oh my God, recession is coming, or Trump is going to have tariffs. And he's afraid, what if my Visa stock drop? Oh my God, right? So if he's afraid of the short-term drop of Visa stock, what will he do? What will the fund manager do? He will buy insurance, right? He'll buy a put option to lock in the price of Visa so that if Visa drops, it's like, I'm okay, correct? Okay. So when he buys a put option, he can choose any put option to buy. So if you go into using whatever broker, stockbroker, you look at this thing called the option chain. And in the option chain, which I'll show you later, you can choose all the different put options with different what? With different what? With different strike price. And you can choose the option with any of the date to expiry. So you can choose an option that expires in 30 days, expires in 60 days, expires in 1 year, expires in 2 years. It's up to you. Yeah. But let's say he chooses the option, the insurance that expires in 30 days. Okay. So let's say, for example, this fund manager, he wants to buy a put option. Now, he could choose to buy this put option here, the Visa put option at a strike price of 280. Okay, so what does this mean? If he buys this put option, what does it mean? It means that he has the right to sell Visa at 280 before it expires. So even if Visa drops to zero, which it won't, of course, but even if Visa drops to zero, he can still sell Visa at 280. He's locked in the price. He locked in the sales price. Got it? Okay. Now, of course, to buy this put option, is it free? It's not free. He has to pay a premium. In this case, the premium he pays to lock in the sales price is $8.40. Right? Now, he could choose to buy this put option. Now, if he buys this put option, then what happened? Now he has locked in the sales price to 275. So if Visa drops, he can still sell Visa at 275. So that's the lowest strike price. So it's cheaper. He only pays $7. Correct? Or he could, of course, buy this put option as well. He locked in the sales price at 270, pays a lower premium. So he can choose whichever one that he wants. Understand? Now, so he pays this premium. Who collects this premium? Who's the one collecting the premium? Me, not the broker. Me, Adam Khoo, right? Because remember, I'm the one selling the put option. I collect the premium. All this money goes to Adam Khoo. Yeah. Okay. So let's look at a few scenarios. Let's look at a few scenarios. Give me a second. Okay. So let's say that this fund manager here, he thinks Visa is going to drop. Okay. So either he wants to buy the put option to protect the stock price from dropping, or he is speculating that the stock will drop, so he wants to make money by buying a put option. And let's say he buys this put option here. He buys this put option here, and he pays a premium of $5.60, okay, which comes to me, right? I will collect this money, understand? Now, what if Visa doesn't drop? Okay, so let's say Visa, in the next 30 days, Visa goes up, okay? Or Visa, the share price goes sideways, okay? Or Visa price drops, but it doesn't go below 270. Now, or in fact, it can even go below 270, but before the expiration, it gets back above 270, okay? So in all these scenarios, the price goes up, the price goes sideways, the price goes down, and the price goes below 270 but goes back above 270. In all these scenarios, what will happen in 30 days? This option that the fund manager bought will become worthless. The insurance expires. It's like you buy insurance on the house did not catch fire, the insurance after 1 year is gone, right? So I will just keep this money. Is that clear? So far, do we understand that? Okay. Now, what happens if Visa does drop? Let's say Visa drops. Okay. Let's say Visa drops to $250 and it stays there after 30 days. So what happens now? What happens now? Now, I collected this $5.60, right? But I'm obligated to buy Visa shares at what price? I'm obligated to buy Visa shares at the strike price because I've insured it for the fund manager, right? So I'm obligated to buy the shares at 270. Now, so I have to buy the shares at 270, okay? But now the shares at 250, okay? So they say, isn't that dangerous? You buy at 270, but now it's at 250, okay? Okay, by the way, remember I collected this money already. So what is my actual price I have to buy Visa at? It'll be 270 minus 560, right? So 270 minus 560. So my net purchase price will be $264.40. Okay. So this is the price I would have to buy Visa at, but now Visa is below my purchase price. Okay. So is this something that's risky? So it depends on the kind of stock, right? So if it is not a good company and the price never rebounds, it keeps going down, then of course it's risky. Then you end up losing money, correct? This is like the wooden house that catches fire and burns, okay? But if it's a good company, it may drop temporarily because of short-term sentiment, but over time, right, it will usually bounce back up, right? And bounce back up, what happen? Eventually, I will sell for a profit. Is that clear? All right. So generally, this is how it works. Okay. So let me show you another example here. Okay. Now, in the market, you can play two roles. You can either be the person who buys a put option or the person who sells the put option, as I explained earlier on. The person who buys the put option, he buys insurance, so he pays the premium. Who collects the premium? Again, the put seller collects the premium, correct? Okay. Now, the person who buys the put, he now has the right to sell 100 shares of the stock to the put seller at the agreed upon price he locked in, which in this case is $270. Okay, so the person who buys the put, okay, he expects the price to what? He expects the price to go down, correct? If the stock price goes down, the put options will increase in value. If the stock price goes down, the put option increases in value, and this guy will benefit. Understand? Okay. Now, the person who sells the put, which is me, why would I want to sell the put? Why would I want to sell the put option? Because what do I get? I get the what? What do I get? I get the premium, right? But by collecting the premium, I'm obligated. Remember, I'm obligated to buy the 100 shares of stock from this guy at the strike price. Is that clear? So, as a put seller, if the stock price goes up, what happens to the put option? If the stock price goes up, the put option will become worthless, right? If the stock price goes sideways, the put option also becomes worthless. And once it becomes worthless, I go, yes, it's worthless. I no longer am obligated to buy the stock. I collect the premium. See how this works? Okay. Now again, what if the price goes down? Okay. What if the stock price goes down? If the stock price goes down below 270 and stays there, then I'm obligated to buy the shares at 270. Okay. So again, question, is that risky? Yes, if you do this on risky companies. But if you do it on safe companies, I mentioned yesterday, the top 1%, these stocks may drop temporarily, but they always rebound because they have got the profits and cash flow. Then, as long as you're patient, it's fine. Okay? So far, so good. Okay. So let me show you specifically how I do it. Okay, let's look at some specific example, right? So the first technique I'm going to share with you is called selling. Okay, selling cash secured put options. Now, what's the keyword here? The keyword is cash secured put options. This means that when I sell the put, right, I must have the cash ready to buy the 100 shares if I'm assigned the shares. That's called cash secured put. Now, if you sell the put, but you don't have the cash to actually buy the shares, that's called selling a naked put. Don't ever do that. Please write this down. Don't ever sell a put if you don't have the cash to buy the 100 shares. That's called selling naked, and that's very, very, very dangerous. Never do that. Never do that, okay? Only sell a put if you have the cash ready to buy the 100 shares. Okay? Now, what is the purpose of this first strategy? The purpose is to get paid, like Warren Buffett, you get paid waiting for the stock price to drop to your intended buy level. Okay? So by doing this, you are able to buy the stocks you want to buy at a huge discount or even for free eventually. Yeah? Now, by the way, how many of you have ever wanted to buy a stock of a great company, but the price was too high and you were like waiting for the price to drop, waiting. How do you have experienced that before? Okay? How many of you would like to get paid every month waiting for the price to drop? How would you like to get paid to wait for the price to drop? That means if the price didn't drop, you get free money. If the price dropped, then you get to buy it, which you wanted to buy it anyway. Would you like to do that? Okay? So this is how it works, okay? So let me explain by going to my drawing board first. Easier to explain by doing some drawing. Huh? Okay, so let me go to my drawing board. Okay, now first of all, here are a few rules to follow with this strategy. Okay, number one, we only use this strategy on high quality stocks, which are the top what 1% of stocks in the market. Now, if you attended my webinar yesterday, what's a high quality stock? What's a high quality stock? One where it has a history of consistently increasing what? Sales revenue, net income, and cash flow from operations. Remember that? Number two, it's got a sustainable competitive advantage, a wide economic moat. Number three, it's got low debt. It's got little or no debt. Okay. So with Stock Oracle, which is our software, you can check this very fast. So later I'll show you how you can check that it's a high quality company. Okay. Now, number two, you only do this on the stock that you want to own. You want to own the stock. That is your intention. And you want to own at least 100 shares. Okay? And number three, you have the cash ready to buy the 100 shares. Okay? So this is the three important rules. Is that clear? Now, some of you may say, but Adam, what if I've got a small account? I don't have so much cash to buy 100 shares. Then how? Can I still do this? Yes. That is part two. So part two, I'll share with you a method where you don't need the cash to buy 100 shares. You can do it with a small account, whether it's a $2,000 or $3,000 account, you can do that. That is part two. Okay. Now for part one, we assume that you have the cash to buy 100 shares. Okay. Okay. Now, if you look at any good company, Google or Meta or Amazon or Microsoft, okay, long term, the share price always goes up. Okay. But does it go up in a straight line? Does it go up in a straight line? No. How does the stock price move? It moves in wave patterns, which I mentioned yesterday, right? It goes wave up, wave down, wave up, wave down, wave up, wave down. Now, we must always buy a stock after wave up or wave down. If you want to buy a stock, you buy after a wave up or after a wave down. Yes, always wait for a wave down. Very good. So over here, let's say the price drops, waves down, right? And it must drop to a what we call a support level. Okay, it must drop to what we call a support level, which you will learn how to draw these support levels in our courses. Okay, now let's say this stock, which is a very good company, it dropped, okay, to let's say $100. Okay, the share price. Now the other thing is this: you must make sure that it is undervalued. It is undervalued. So let's say the intrinsic value of this stock is 150. You can easily check the intrinsic value on Stock Oracle, which is our software, right? Okay, so if the stock is at $100, it is below the intrinsic value. Now, if you wanted to, could you buy it at $100 right now? Is there anything wrong with buying at $100? Nothing wrong. You could buy at $100, right? Okay. But if you wanted to play hard to get, you wanted to be even more stingy. So you know what? I want to buy even cheaper. Okay. So let's say you want to buy it at only $85. Okay. Now, what could you do if you want to buy it at 85, but now it's at 100? you simply just put a buy order at 85. You put a buy limit order at 85 and wait for it to drop, right? So if it drops to 85, you get to buy the shares. If it never drops there, you wait like an idiot, sucking your thumb. Okay? So instead of waiting like an idiot, sucking your thumb, what can you do to get paid to wait? You sell a put option at the strike price where you want to buy the shares, which in this case you sell a put option at the 85 strike price. Okay. Now remember, when you sell a put option, you collect what? You collect premium. And we always want to make sure the premium we collect is at least 2% of the price. At least 2%. If not, don't do it. Okay. So what's 2% of $85? What is 2% of $85? Is $1.70. Okay. $1.70. Okay. So this is the premium we collect. This is the money we get. Now, in options, you have to buy minimum one contract. Okay, minimum buy or sell one contract. Now, one contract is always 100 shares. One contract is always 100 shares. So $1.70 times 100 is what? What is $1.70 times 100? That's right. So I collect $170 in premium. Is that clear? Okay, cool. Now, so once I sell the put option, okay, I will collect the premium upfront. And normally I will sell a put option that expires between 30 to 45 days. And not more than that, right? So 30 to 45 days is the sweet spot because that is the time when options decay the fastest and they lose value the fastest. So the more it loses value, the better for us because then we are able to collect this premium, okay, faster. Understand? So far, am I clear? Are you clear? Okay. So in 30 days, okay, in 30 days, if the stock price goes up, the stock price goes sideways, the stock price goes down, but doesn't go below 85, right? Doesn't go below 85. Then what happens? Then I don't get to buy the shares. Oh, so sad. I don't get the shares, but I get to collect the premium. And I can do this every month. Collect money, collect money, collect money, collect money, collect money, collect money, right? Okay. But let's say the day comes when the price drops below 85 and stays below 85, then I will eventually get to buy the shares. At what price? I'll buy the shares at 85. Minus 170, which I collect. What is my net purchase price? My net purchase price is $83.30. Do we get the concept now? Okay, great. So let me show you a few examples, okay, so that you really understand what I'm talking about. Now, this is a previous example, okay, on this company called Fortinet, all right? Now, is Fortinet a good business? Again, the fastest way you can check is you can go to Stock Oracle. Let me show you and type Fortinet to make sure that it's a good business. Okay. So we only want to do this on white mode companies. You can see white mode. White mode means they have got very strong competitive advantage. White mode, right? White mode is the best. Now, narrow mode is still okay, but white mode is the safest, right? Now, do not do this on no mode companies. Do not do this on no mode companies. So, for example, if you look at a stock like this stock called IonQ, which is one of the recently hot stocks, this has no mode. Okay, no mode means very dangerous. Okay, very dangerous. Do not do this on no mode companies. It must have at least a narrow or white mode, right? But white mode is of course the best. Okay. Now, you can see the intrinsic value is $96. Right now, the share price is at $78. So is it undervalued right now? Yes or no? Is it undervalued right now? Yes. Okay. Now, you can also check on this. Okay. You can see that in terms of predictability, it is very high. The profits are very predictable. The profitability is very high. And the financial strength is very high. So this is the safest when it's all this is very high. Okay. Now, if it's medium, it's still okay, right? But it higher is better. Now, if it's low, then it's very dangerous, right? Okay. So you can check this very quickly. So let's go back to my example over here. Now, this example I'm showing you, it happened a few years ago. Okay. So at the time, the share price was lower and the intrinsic value was lower. But now the intrinsic value is much higher. Okay. So at the time, the intrinsic value was $82. Okay. And the share price, look at it, wave up, wave down, wave up, wave down, wave up, wave down, wave up, wave down, wave up, wave down. Okay. Always wait for a wave down. So when it dropped here, at that time, the share price was 81.39. So is it below the intrinsic value at that time? Yes or no? Yes. Okay. So could I buy at $81 right here? Could I just buy the shares? Yes, but I want to play hard to get. Okay. So instead of buying at 81, I want to buy at 72, which is much lower because I'm very stingy. I want to bargain with the market. Okay. I want to buy at 72. So instead of waiting at 72, I sell a put option with a 72 strike price. Okay. I sell the Fortinet put option at 72 strike price. And at that time, I collect a premium of $1.50. Now, what is $1.50 divided by 72? What is $1.50 divided by 72? Do I get at least 2%? Is it at least 2%? It's exactly 2%, right? So good, all right? So $1.50 times 100 shares, I collect $150 in premium. And this put expires in 39 days. Okay. So this was an actual trade that I did. And you can see this was the notification that I sent to my subscribers. Yeah. So yesterday I mentioned the Ultimate Investors Playbook, the UIP. If you subscribe to UIP, you get all my option trade notifications every day. So every day, what I buy, what I sell, I will do a screenshot and I'll send my notification. Okay. So this was on the 28th of October. You can see I notified my subscribers. I sold a cash secured put on Fortinet at 72 strike price, 6 December expiry for 150 premium. And then I show you my order. All right. So all this is sent notified to my subscribers for UIP. You can subscribe to UIP. Now there's a big discount. You can check it on the website. Okay. So let's look at the different scenarios. Okay. Scenario, right? Now, scenario number one. So first, this is the same chart I showed you. Okay. So at the time, the share price is $81.39. The put option, the strike price is 72. Okay. And expires in 39 days. So what actually happened to the stock? The stock, after I sold it, it did drop, right? You can see the price drop, but did it reach 72? Did it reach 72? No, right? In fact, it dropped to 77 and then went all the way up. So it never hit 72. So in the first scenario, okay, if the shares stay above the strike price by the expiration date, what happened? The put option I sold will become worthless. And then I no longer have to buy the shares. I just keep the premium. And that gets me 2% return per month. Now, 2% return a month is that Is that pretty good? Right? Right. So 2% a month, if you compound it, that's 24% return a year. Right? Now, some of you are asking, Adam, how do you choose 72? Why 72? Why not 71? Why not 75? Right? Don't worry, I'll explain shortly. Okay, I'll explain shortly how I choose the strike price. But to give you a quick answer, I usually look at the delta of the put. The delta of the put. Okay. So I normally choose a delta between 25 to 30 delta. Okay. What does that mean? I'll explain in a while. But I use this thing called delta to select the strike price. Yeah. I also choose a strike price such that the premium I get should be at least 2% of the strike price. Okay, so these are the two ways I decide on the strike price. Okay, so that's the first scenario. Now, second scenario is, what if after I sell the put option, the share price falls and stays below the strike price by the expiration date? So let's say the share price drops, right, and it goes below 72 and it stays below 72 on the date of expiration. Okay, now if you don't do anything, and the price stays below the strike price at expiration, the broker will automatically exercise the put option. The broker will automatically exercise the put option if the price is below the strike price by expiration. And then you will be assigned the 100 shares. Okay, you'll be assigned the 100 shares. Okay, so I'll be obligated to buy the 100 shares at $72, which I don't mind because it's a good company and I buy it super undervalued, right? So over time, it is going to make me a lot of money because I'm buying a good company at a discount. Okay, but remember that I already collected 150. So 72 minus 150, my net purchase cost is $70.50. So either way, I win. Can you see this is a win-win scenario? It's a win-win scenario. Why is it win-win scenario? Because if the share price doesn't go down, I get free money. I get free money. If the share price goes down, I get to buy the share that I want to buy anyway, but at a discount. You get the point? But like I said, you only do this on stocks that you want to buy. You want to buy it. You know it's a good company and you have got the cash to buy it. If not, don't do it. Okay? Now, what happens if the share price drops below the strike price, and at the last minute you decide, I don't want the shares, I changed my mind, I don't want the baby, I don't want to be a father. Oh. How? At the last minute, can you get abortion? For stock market, can you say, I don't want the shares anymore? Can or not? Can you do that? Can, no problem, all right? So what you do is, if you don't want the shares, no problem. Okay, if you don't want the shares, then before it expires, you buy back the put option. Okay, that means the put option that you sold initially, you buy it back. But you have to buy it back at a higher price than you sold it. Because when the share price drops, the value of the put option goes up, right? So you buy the put back at a higher price, you buy it back at a loss. Okay, you buy it back at a loss. But I don't like to lose money. So once I buy the put option back at a loss, what do I do? I will simultaneously sell another put option, a new put option, at the same strike price or lower strike price with another 40 days expiration. And the new put I sell, the premium will cover the loss of the old put. So this process is called rolling the put down. So every time we roll, we get new money to pay for the loss. So in the end, as long as the share price rebounds, I don't lose any money. So again, you only do this on very safe companies that you know the share price will rebound. If the share price never rebound, like keep dropping, then of course you lose money. All right. So you only do this on very safe companies. Is that clear? So in the options trading course, I'll go into greater detail on how I roll the put option for a credit, right? How I roll for credit. So if I don't want the shares, I keep rolling, eventually I don't have to lose anything, right? What if no one buys the put? There'll always be someone to buy the put. Confirm. There'll always be someone to buy the put because the market makers will always buy or sell when no one wants to do it, right? But there's always someone to buy and sell. They're called market makers. Understand? So far, is this a bit clearer, everyone? Okay, good. Now, in reality, when I sell a put that expires in 30 to 45 days, in reality, do you think I actually wait for it to expire? Do you think I really wait for it to expire? No. No, I don't, right? So once I sell the put, the moment the share price goes up, the put I sold will lose value very fast. And once it loses more than 80% of its value, I will buy it back to close the trade. So for example, the Fortinet one, which I showed you, this one, right? You can see 28 October, I sold the put, okay? 28 October, right? But look at the follow-up when I send my notification. You can see that on the, what's the date here? On the 8th of November, okay, which is after 11 days. After 11 days, I bought back the put at 7 cents. I sold it at 150. You see, I sold the put at 150. And then in 11 days, the put was only worth 7 cents. So I bought it back at 7 cents. I bought it back at 7 cents. So how much do I make? Sorry, my mental math's not very good. Huh? So I make $1.43, okay, out of the 150. Out of the 150, okay? So if I had waited for 40 days, I will get the full 150. But what's the point of waiting for 40 days when in 11 days, I already get 143? So I already realized 95% of the profit in 11 days. Can you see what I'm saying? All right. So you can see most of my trades, I do not wait 30 to 45 days. I don't. I will close it within a few days. Like you can see this one, my Microsoft, I closed the put at 120, 85% realized. I closed this 95% realized. I closed Google 80% realized. I closed Yum Brands 71% realized. And usually I close after 10, 20 days, I close. Right? I don't wait 30 to 45 days. Right? Understand? Unless the I've not gotten at least 70 to 80% of the profits yet. Okay. Okay, so let me show you one recent one. This one was just done 2 days ago on Friday. Is it? Yeah, Friday. All right. So this is very recent. Okay. So on Friday, I did this. I sold a cash secured put option on Amazon at 200 strike price, expiry 2nd January, and I collected $4.30 premium per share. Now, why did I do this? Let me show you the chart. Let me show you the chart. Okay. Let's look at the actual chart here. Right. So Amazon. Now, first and foremost, is Amazon a good business? Is Amazon a good business? You can go to Stock Oracle and check. Yes. You can see predictability high, profitability high, financial strength high, high. Looks pretty strong to me. And you can see this is a what? White mode. Okay. Now, what is the intrinsic value of Amazon? The intrinsic value, according to Stock Oracle, is $238. Okay. So right now it's at 220. Is it undervalued? Is it undervalued? Yes, it's undervalued. So good company, undervalued. Now, So let's look at the chart now. Okay, let's look at the chart. Okay. Now, can you see the wave pattern? Wave up, wave down, 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 wave up, wave down. So is it after a wave down? I told you, always wait for a wave down. Yes. And it waved down to a support level. Can you see this 200 moving average is a support level? Can you see the support level here? Right? Now, this is the intrinsic value. Okay? So the price dropped below the intrinsic value to a support level. Now, if I wanted to, could I buy Amazon at this price now? Yes, nothing wrong, right? Good company, undervalued. I could buy right here. Okay? Now, for me, I already have a lot of Amazon shares. I already have quite a lot. So if I want to buy more, I want to get a bigger discount. I want to play hard to get. Okay. So what did I do on Friday? Instead of buying at 220, I sold a put option at 200 strike price. Understand? So I sold the put option at 200 strike price. And how much did I collect? What's the premium I collect? I wrote it in my notification. I collected $4.30 and I sold 2 contracts. You see? So I collected $4.30 premium. So is that more than 2%, by the way? 430 divided by 200? Yes, that is about 2.15%. Okay. Any questions? Okay. So let's see what happens in the next 40 days. Okay, in the next 40 days, if it goes up, if it goes sideways, if it goes down and goes back up, I will get free money, right? If it goes below 200, stays below 200, then I don't mind owning more Amazon at 200. Minus 430, I will pay $196 for Amazon shares, right? How do I choose the expiry date? Usually I choose 30 to 45 days. 30 to 45, that's a sweet spot, okay? Okay, so let's look at another example right now. Okay, let's look at another example right now. I want to show you as many examples so you guys get very clear. Okay. Okay. Now let's look at Nvidia. Let's look at Nvidia. Is Nvidia a good company? Yes. Okay. So what's the intrinsic value of Nvidia? The intrinsic value is $210. Okay. So right now, wave up, wave down, 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 wave up, wave down. Okay, so now it waved down to a support level. You can see there's a support level here, right? It's a support level here. And is it undervalued? Yes or no? Yes, it's undervalued now. Okay, so I can buy Nvidia now at 179. Okay, or I could sell a put at a bigger discount and get free money waiting for the price to drop. I can also do that, right? So what strike price do I choose? Let me show you. Let's go to the trade tab here. Okay. Now, when you go to the option chain, you can choose any expiration date, right? 16 days to expiration, 13, 20. So which one do I choose? Which one do I choose? How many days to expiration? Between 30 to 45 days, right? So I could choose expire 26 December, or I can choose expire 2nd January, either one, okay? So to get more premium, I normally choose the one with more time left, right? So I'm going to open this up, okay? Now, then here, you can see the put options, and you can see the different what? Different strike price, can you see? So right now, Nvidia is actually at 180, right? The share price is now at 180. So How much discount you want to buy? How much discount you want? You want 165, 160, 155? It's up to you. There's no right or wrong. You can choose anything, right? You can choose how much discount you want. It's up to you. Okay. But like I told you, for me, I want to get at least 2% premium. Now, one clue is look at the delta. Okay. Now, I normally will look at the delta of, of below 30. Okay. Below 30. So this is 33. This is 27. So I look at it anywhere below this. Anywhere below 165. Okay. Now, what does this 27 delta mean? What does this actually mean? When you sell a put at 27 delta, what does it mean? Anyone want to guess? What does this 27 mean? That means roughly there's only a 27% chance you will end up buying the shares. There's only a 27% chance that you will end up buying the shares. Okay? That means there's only a 27% chance the price will drop below 165 and stay there in 41 days. Okay? There's only a 27% chance. Understand? Now, so question, could I sell the 165 put? Can or not? Could I sell this put? If I sell this put, how much premium do I get? I get $5.97 premium, right? So 597 divided by 165 is how many percent? 597 divided by 165. That's 3.6% premium. Is that very good? That's very good, right? Okay. Now, so if you want to sell the 165, nothing wrong, you can do it. Nothing wrong, right? Okay. But if you say, hey, I'm even more stingy, I want to get a bigger discount, and I want to sell at let's say a 160. Okay. If you sell at 160, then your chance of getting the shares is lower. You only have a 22% chance of getting the shares. All right. And you collect 470. But 470 divided by 160, 470 divided by 160, you're still getting 2.9%, which is still very good, yes or no? Now, could you even sell the 150 strike? Could you even sell the 150 strike? If you sell the 150 strike, there's only 14% chance that you get the shares, which is very low chance you get the shares, but you get 285 premium. 285 premium divided by 150, or that's less than 2%. So this one cannot, right? You cannot use, because you can less than 2%, not worth it. So 155, is it still worth it? How about 155? If you sell 155, there's an 18% chance you get the shares, and you collect 367. 367 and a half divided by 155, you're getting 2.3%, which is still not bad. All right. So which one should you sell? The answer is it's up to you. It's up to you, right? If you want a higher chance of getting the shares, then you choose a higher strike price. Understand? If you want a lower chance of getting the shares, you choose a lower strike price. Simple. It's really up to you. So Yandi is asking, could I choose 135 strike price with only 7% chance? Yeah, you could. You could do that, right? That means there's only a 7% chance you get the shares, but then the premium is very low, right? Your premium is only 135 out of 135, right? So it's only like 1%, not really worth it, right? But it's up to you, right? It's up to you. Is this useful, guys? Is this interesting? Are you clearer now how this works? Okay, cool. Now, like I said, hold on, give me a second. By the way, let me share with you some of our students who use this technique and they love it, right? So this is Mari. She's from Japan. She said, hi, Master Bang and Adam. I shared this earlier today. Let me send it to you. I've been trading for years, but I only knew single calls and puts. I was making a lot of money and then I lost almost all my profits. After that, I made more money and then I lost profits again. I was just going around in circles. Very common. All of us go through that at the beginning. That's what happened to me. After I joined Piranha Profits in 2020, I studied so hard to master option strategies. And under Bang and Adam's guidance, I'm making consistent profits with confidence without stress. Now I can sleep through the night, and every day I'm so excited to trade and invest without any fear. This year alone, just in 1 month, I'm up 35,000 US dollars. Right? Joining Piranha Profits was the best thing I've ever done in my life. This is Veronica. She said, for all those who are new to options trading, I'd like to assure you, you have made the right decision to join Piranha Profits. I'm also a total newbie to stock and options trading, as I've never invested in stocks or options before joining Piranha classes. I'd like to share my personal testimonial that the options trading lessons taught by Bang Pham Van, Adam, and YY, we have 3 teachers, by the way, Bang, myself, and YY, truly works. Over the past 60 days, I realized profit of 9,180 US dollars. This may seem small profit to many senior old bird traders here, but to a brand new beginner like me who started in April this year, this is definitely a great start in my options trading journey, right? And this is her account that she screenshot, okay? This is one of our other students from the US. This was some time ago. And he says, I'm writing to express my heartfelt gratitude for your being the most influential teacher, mentor, and advisor in investing and trading. This month, I continue to generate 150K in trading, all from options. My trading account shows 90K profits and 60K in another account. You have changed my life since I joined your classes, right? And this was his screenshot from his account over there. Okay. This is another student, Barryman. 2024 has been an incredible year of growth and learning in options trading with 400,000 in closed profits, right? And immensely grateful to Bang Pham Van. This is his account, okay? Now, like I said, for that first strategy, you need the cash to buy 100 shares. What if you don't have the cash to buy 100 shares? So in the case of NVIDIA, sorry, let's go back to NVIDIA, right? So in the case of NVIDIA, if you sell, give me a second, okay, if you sell the put option, okay, at let's say 160, okay, that means you're obligated to buy 100 shares at 160, correct? Which is $16,000. So you need to have 16,000 ready to buy the shares. You understand? Okay. If you don't have the 16,000 to buy the shares, then you're selling the put naked, which is very dangerous. You've got to have the money ready to buy the shares. Now, again, some of you may say, but Adam, I don't have the money to buy the shares. I have a small account. I can't afford to buy 100 shares. Can I still sell put to get premium? The answer is yes. Yes. How? This is the second technique I'm going to show you. Ready? Want to learn the second technique? Okay. Now, before I share with you the second technique, we will take a 5-minute toilet break because I need to go to the toilet. Okay. So, in fact, less than 5 minutes, but let's take 5 minutes, come back, and I'll share with you how to do this without needing the money to buy 100 shares. Okay. So, come back in 5 minutes. Okay, so I'm back, but I'll wait a minute or so because I think some of you may have gone to the washroom as well. So I'll just wait a minute before I get started. In the meantime, I'll just share my screen. Okay, there we are. I know a lot of you have questions, especially those of you new to options, and my team will help to answer as many questions as we can. Yeah. All right. Thank you, Cam. I appreciate that. Okay. Everyone ready? Everyone ready? We're back? Okay, good. Yeah, guys, we go toilet very fast. And the funny thing is, my wife, for some reason, when she goes to the toilet, right, like in the mall, she goes faster than me. No, normally women take longer, right? But my wife is the only woman that's faster than me. I don't know how she does it. Yeah, so I never have to wait for her. She always waits for me in the toilet. Yeah. Jasmine also says, me too. Oh, very good. Okay, very good. Yeah, I guess you don't, powder the face and all that, right? Okay. So let's go. Yeah. Now, so how do we sell put options and collect premium without having to own 100 shares? So this method is called a bull put spread. A bull put spread, which is also known as a credit spread strategy, right? It's called a put credit spread strategy. And this is a strategy on how you can create regular income with limited risk and limited capital and a 70% win rate. Yeah. So one of the reasons why I love using this strategy is because it's got a very high win rate of 70% or more. In fact, there's another version of this in the options course that has got an 80-90% win rate. All right. That's called the bull put spread extreme strategy. Okay. So that one is in the course, but today I'll share with you the 70% win rate strategy. Ready? Okay. So now the first thing is, when do we use this strategy? Okay. We use this strategy on stocks that we don't want to own the shares. We don't want to own the shares. We just want to get the premium by selling the put, but we don't want to own the shares. Now, do I use this method myself? Yes. I use this on stocks where I don't want to buy the shares. Okay. But I just want to get the premium. Understand? Okay. Now, but only do this on large companies, on large stocks that have a market cap of at least $10 billion. Okay, do not do this on small companies. Do not do this on small. It's going to be for big companies. Okay, now you can use this method both on what we call trend reversal strategies and trend continuation strategies. Okay. Now, how many of you watched Alson's webinar yesterday? Alson's webinar yesterday. Okay. So I believe Alson showed you a lot of trend reversal strategies, like the bear trap and the bull trap, right? So what is a trend reversal strategy? Trend reversal means that you're catching the reversal of a trend. Okay. So for example, the price going down and this is a downtrend, right? Downtrend, downtrend, downtrend. And then suddenly it dropped like that. And then it does this. What is this called? You learned yesterday. What is this called? This is called a bear trap, right? And then after this, it will, hallelujah, right? There's a high chance you'll bounce up. Now, this is called a trend reversal strategy because the trend is reversing from down to upwards, okay? This is called a reversal strategy. Now, can you use this method for reversal strategy? Yes, you can. You can, okay? But for today, I'm going to show you how to use this method on trend continuation strategies. What's trend continuation? Trend continuation means we are going to enter only when the price is on an uptrend. Okay, that means we're not looking for reversal pattern, we're looking for continuation pattern. Continuation pattern. Okay. Now, so how do you know that the stock is on a strong uptrend? This is what I look at. Can you see this red dotted line here? Can you see this red dotted line here? This red dotted line is called the 20 exponential moving average. This blue dotted line is called the 40 exponential moving average. Now, when the 20 EMA is above the 40 EMA, the red line above the blue line, that means the short-term trend is still up. The short-term trend is still up, okay? Then this blue line here is called the 50 simple moving average. This green line is called the 150 simple moving average. As long as the blue line is above the green line, the 50 is above the 150, that means the medium-term trend is up. This is called the short-term trend. This is called the medium-term trend, okay? So the safest time to use this strategy is when you have a strong uptrend, when the 20 above the 40 and the 50 above the 150, okay? So this is called a trend continuation, all right? Now, on an uptrend, does the price go up in a straight line? Once again, does the price go up in a straight line? No, it moves in wave patterns, right? Wave up, wave down, wave up, wave down, wave up, wave down, wave up, wave down. So always wait for a wave down, and it must hit a what? Hit a what? Hit a what? After the price drop must hit a what? A support level. And then you could wait for a bullish candlestick pattern. Yesterday, did Alson talk about some bullish candlestick pattern? Did he talk about bullish candlestick pattern? Like a pin bar or a bullish markup bar. Okay? So you can see here there's a pin bar. There's a bullish pin bar here, and there's a markup bar here. So once you see this pattern, there's a high probability that the price will what? The price will what? The price will continue the trend, right? Got it? Okay, so this is what we're looking for. Now, is it a guarantee it'll go up? Is it 100% guarantee? No, there's no guarantee. It's just a probability. So we're looking for high probability entry points, okay? Now, so once I think there's a good chance, okay, this is on the daily time frame. Someone is asking, Larry, this is on the daily candle, okay? Now, once I think that there's a good chance the price will continue going up, what do? I will sell a put option below the market price. Okay, if you sell a put option below the market price, we say you're selling out of the money put option, OTM, out of the money, right? Now, why do I sell this put option? Why do I sell this put option? Because by selling, I collect what? I collect premium, right? Let's say I collect $5, for example, just as an example. Okay. But again, the problem is if I sell the put option, I'm obligated to buy the 100 shares if the price goes below the strike price, right? But I don't want to own the shares. So if I don't want to own the shares, what must I do? Then I need to buy another put option below the put option I sold. Okay. So I sell a put option here, then below I buy another put option. And most of the time, the difference in the strike price is $5. Okay, most of the time, okay, $5. Okay. Now, when I sell a put, I collect money, right? But now that I buy a put, must I pay money? Must I pay money when I buy a put here? Must I pay money? Yes, I pay money, right? But I will pay less than what I collected. So let's say I pay $4. So I sell this put, I collect $5. I buy this put, I pay $4. So net, I collect $1. So this is called a credit spread. Why is it called a credit spread? Because when I enter the trade, I collect $1 upfront. I collect $1 upfront. It's called a credit spread. So I do not pay money to enter the trade. I get paid to enter the trade. Now, both the put option must have the same date to expiration. They must both expire on the same day. And again, I choose 30 to 45 days. That is the sweet spot. Okay. Now, Let me explain why I do this. Okay. Now, remember, when I sell a put option, it's like I'm selling insurance, right? I'm selling insurance. But when I buy another put here, I'm buying reinsurance. You understand? So I sell insurance to people, but I buy reinsurance to protect myself. I sell insurance, I buy reinsurance. By the way, does this happen in real life? Do companies who sell insurance also buy reinsurance? Yes, same concept, right? So when I sell a put option, I'm obligated to buy 100 shares of the stock, right? When I buy a put option, I have the right to sell the 100 shares. So here I'm forced to buy 100 shares, but here I can sell the 100 shares. So this will cancel off. So this hedges my position. So this limit my risk. It limit my risk. The most I can lose is this amount of money. If the stock price drop and never come back, the most I can lose is this amount, which is here. Okay, that's why I do this on stocks that I don't want to own, or stocks that are more risky. I will do a credit spread. Okay, yes, you need a margin account to do this. Okay, now, so let me show you one more time so you guys get very clear. Huh? So again, do this only for large companies, and ideally do it when the implied volatility rank is high, ideally above 35%. Now, is this a must? No, it's not a must, but it's good to have it, right? If you have a implied volatility rank above 35%, your premium is very good. Okay, now how do you see the IV rank? Right, all this will cover in the options course. You can check it from the broker. The broker will show you the IV rank. Now, if you don't want to look at the IV rank, you can look at the VIX, the volatility index of the market. Normally, if the VIX is above 15 to 20, then it is a very good time to do this strategy because you get very good premiums. Okay. If the VIX is very low, like below 15, then this strategy is not very useful. Okay. So that is what I look at. All right. So again, we'll cover this more in the options course. Yeah. That's more technical. Yeah. Okay. So let's look at this stock again. So by the way, is this an uptrend? Is this an uptrend? Is this an uptrend? Yeah. The 20 is above the 40, right? Red dotted line above blue dotted line. So this tells us the short-term trend is still up. The blue line 50 above the green line 150, medium-term trend is up. So this tells us the uptrend is very strong, okay? And then we wait for a wave down bounce, okay? Wave up, wave down, wave up, wave down, wave up, wave down, and then wait for a bullish candlestick pattern. So we know there's a good chance it will go up. Okay. So once we know there's a good chance it will go up, what do? We sell a put option below the market price. Now, some of you will say, how low do I sell? Right? How far away do I sell? That's where I look at the delta. That's where I'll look at the delta. So I choose a delta 25 or less, 25 or lower, right? 25 or lower. Understand? Don't ever choose more than 25. Then simultaneously, I sell this put, I have to buy another put here. And what is the difference of the strike price? I mentioned earlier on. What is the difference of the strike price? Yeah, usually I choose $5. But if it's a very high price stock, then I may have to choose $10. Okay, but most of the time I choose $5, right? And then both must have the same expiration date. I usually choose 30 to 45 days to expiration. Understand? So far, can you follow me, everyone? Okay, good. Now, some people would ask me, Adam, if you think that the share price will go up, why don't you just buy the stock? Why don't you just buy the stock or buy a call option? Why must you be so complicated? Sell the put, buy another put. Oh, so complicated. Just buy a call option here. Why do this for? Right? So, why? Why don't I just buy a call option here? So simple. Why? Or why don't I just buy the stock? Why must I sell put, buy put? Why? Okay? The reason is very simple. The reason is if you buy a call option here, right? You buy a call option or you just buy the stock here, you only make money, if the price goes up. Agree? You only make money if the price goes up. If the price doesn't go up, if the price goes sideways, what happened? You don't make money. If the price goes down, you don't make money. You only make money when the price goes up. Agree? Now, remember, when you buy a stock, only three things can happen. Either the price go up, the price goes sideways, or the price go down, right? So if you buy a call option or buy the stock, you only make money in one of three scenarios. Are you clear what I'm saying? You only make money when it goes up. If it goes sideways, go down, you lose money. Okay? But when you do this, sell a put and buy a put, what happens? The price goes up, you make money. Correct? The price goes sideways, you also make money. The price go down, you also make money. You make money in all directions. You only lose money if it drops below the strike price. You follow what I'm saying? So in other words, you have got a very big profit zone. That's why we have a win rate of over 70%. So we call this a non-directional trade. That means we don't need to be right on the direction. Even if the direction is wrong, we still make money. But if you buy a call option or buy a stock, you must be right on the direction. Is that clear, everyone? So price goes sideways, we make money. Price go up, we make money. Price go down a bit, also make money. So your chance of making money is more than 2/3. That is why I like this strategy, because I don't need to predict the price. Clear? Okay, so shall we look at a real life example now? Okay, let's look at a real life example. Let's look at NVIDIA. Okay, let's look at NVIDIA. Now, right now, the stock market is closed. So the prices you see are based on Friday's price. On Monday, when the price opens, it could be different. Okay, it could be different. So I have to reanalyze it on Monday. But let's imagine that now we use the price that we see now. Okay, so first, let's look at NVIDIA. Is NVIDIA still on an uptrend? Is it still on an uptrend? Is the 20 still above the 40? Is the 50 still above the 150? Yes. So the uptrend is still there. Okay. So wave up, wave down, 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 wave up, wave down. So now you can see it wave down to a support level. You see the support level here? Okay. Now, if you want to be safer, you can wait for a bullish candlestick pattern. Then you do this. Then it's safer. Okay. Now there isn't a bullish candlestick pattern yet. So if you want to be cautious, don't do this first. Yeah. But for the purpose of demonstration, let's do this. Okay. Just to demonstrate to you, because we cannot wait for it to turn bullish yet. Right. Okay. So what am I going to do? I'm going to sell a bull put spread. Now, so first thing I do is I go to my trade tab. By the way, in the options trading course, you're going to learn how to execute this on different brokers, all right? And we are primarily going to use interactive brokers, all right? The reason I'm using this other platform is because it's easier to teach using this, all right? Okay, so what's the current price of NVIDIA? What's the current price? The current price is $180. Okay? Okay, very good. Now, so first thing I do is I have to select the date to expiration, right? So which one should I choose? How many days to expiration? 30 to 45 days. So I could choose expired 26 December or 2nd January, right? You can play around with either one, okay? So I'm gonna choose this one first and let's see if that works. So I'm gonna open it up. Okay, there we go. And I'm going to look at my put options. Okay. Now, so remember, I need to sell a put and buy another put, right? Sell a put, buy another put. So first, the put I sell, which strike price do I choose? I look at the delta to help me, delta. Remember, I choose the delta 25 or less. So where's 25? Uh, okay, so 27 is too high, right? So what's the next one? There's no 25. So what's the next one? The next one is 22. Huh? So there, I sell this one. Is it? Simple enough. Okay? Just choose below 25 or below. Okay? So what I'm going to do is I'm going to sell the 160 put. And I'm going to buy the put below that, which is $5 away. Remember I told you $5? Is this $5 difference? All right. Okay. So I'm going to buy this one. So I'm gonna sell the 160. I'm going to buy the 155. Okay. Now, when I sell the 160, how much money do I collect? How much money do I collect? I will collect $4.70, right? Now, if I buy the 155, I have to pay $3.68. So 470 minus 368. Do I still get a credit? Yes. What is the difference? The difference is $1.02. Understand? You get it now? So I sell insurance, I buy reinsurance. Okay. So what I'm going to do is I'm going to sell this one and buy this one. Okay. So when you do it simultaneously, you will earn a credit, right? Credit of $1.02. Now, one contract is 100 shares. One contract is 100 shares. So one contract is 100 shares. So how much do I collect for every contract? Can you see this is one contract here? One contract? So I will collect $102. Understand? Okay. Now, so let me go to the chart and show you what it looks like on the chart. Okay. So on the chart, you can see here 160 and 155. Can you see? Okay. So I sold the put here. I sold the put at 160 here, and I buy a put at 155 here. Okay. Now, so later I'll show you. If the price goes up, what happens? I make money. If the price goes sideways, I make money. If the price drop, I also make money. But I lose money if what? I only lose money if what? I only lose money if it goes below what? If it goes below 160, then I lose money. Okay? So I have got a big profit zone. Okay? But I will lose money if it drops below 160. If it drops to 160, then I will cut loss. I will cut loss. I'll show you later what I mean by that. Yeah? Is that clear, everyone? Okay. So, like I said, once the price hit 160, or I think it's going to hit, I cut loss. I cut loss. So I don't lose that much, right? Okay, so let me go back to this thing here. Okay. Now, I'm going to show you, I'm going to send in the trade and I'm going to show you this little box over here. Now, so you can see that what's my maximum profit per contract? My maximum profit is $102. Can you see? Okay. Oh, by the way, I forgot to mention, when you do this, okay, if the difference in the strike price is $5, you must collect minimum $1. You must collect minimum $1. If it's less than $1, you cannot take the trade. You cannot take the trade. It must be minimum $1. Is that clear? Okay. Now, if you choose a $10 strike price difference, okay, then minimum you must collect how much? Minimum you must collect how much? Minimum you must collect $2. Okay. But like I said, most of the time, I will choose the $5 strike difference and I collect $1. You must collect $1, not less than that. Okay. Okay. Let's go back to this. Okay. So in this trade, what's my maximum profit at expiration? My maximum profit is 102. Now, you can see what is my maximum loss. My maximum loss is 398. Now, some of you may say, Adam, are you crazy? You only earn $102, but you can lose 398. You can lose 4 times more than what you earn. Are you insane? Don't worry. Relax. Okay. Now, first of all, is it possible I can lose 398? Could I really lose 398 per contract? Yes, I could if I did not manage the trade properly. So in other words, if the stock price dropped below 160 and I didn't do anything, right? I say, I don't care. It dropped below 160 and I let it expire in 40 days. Yes, I will lose 398. Now, if you ever do that, if you ever allow that to happen, you must ask your wife, husband, father, mother, give you one tight slap on the face. Slap. Or I go to your house, I slap you. Okay? Because that should never happen if you follow the rules. And what's the rules? The rules is you must manage the trade, which means once the price hit 160, cut loss. If you cut loss, you will lose very little. Okay? But if you don't cut loss and you allow the price to keep dropping, yes, you can lose 398. Is that clear? Okay? So if I cut loss where I'm supposed to cut loss, how much do I lose? Okay, so let me show you. What I help you monitor? What, John? I go to your house and help you monitor? Siao. Of course not. Okay, but of course, when I enter the trade, I will share with you guys. Hey, I entered this trade. Okay, but you have to monitor yourself. All right. What do I mean by cut loss? Cut loss means you close the trade. You close the trade, right? I'll show you how I close it. Okay. So let me show you what is the risk and the reward. Okay, so I'm going to do an analysis here. And what's the date today? 23rd November, right? 23rd November. Or let's put 24th because 24th is Monday. Okay, very good. Very good. Hold on. 3rd January. Okay, cool. Now, so let me show you this chart here. Now, this chart is very important. Okay. Okay. So let me teach you how to read this profit and loss chart. Okay. This is called profit and loss chart. Now, do you see this zero line? Do you see the zero line? Okay. So on the y-axis, anything above this is profit. Okay. This is profit. Yeah, profit. Anything below this is loss. Okay. Profit, loss. That is the vertical axis. Now, on the horizontal axis, what is this? What is this 170, 180? What's this? What's this? This is the stock price. Okay. So currently, what is the stock price? The stock price is now 180, right? NVIDIA is now 180, right? Correct? So NVIDIA from here could go up to 190, 200, the share price. It could stay here, or it could drop to 170, it could drop to 160, or whatever, right? Correct? The price can go up and down. Understand? Now, so far, do you understand this chart? What I just said? Okay. Now, take a look at this green line. Can you see this green line here? Can you see this green line here? You see this green line? Okay. That green line is your profit or loss on the day of expiration, which is in 40 days, right? So it expires 2nd of January. Can you see? This is the expiration date, 2nd of January. Okay. So you can see that if the share price stays at 180 and by the time it expires, how much do I make? I'll make $102. Can you see? I make $102 here. Can you see? Okay. If the share price goes up, same thing, by expiration, I make $100. Okay. Now, even if the share price go down, go down until here, okay. But by the expiration, do I also make $102? Yes or no? So can you see that this whole thing here, okay, this whole thing here, this is my profit zone. Can you see that, guys? So as long as NVIDIA doesn't go below 160, okay? So 160 is what? My danger zone. Okay, that's my danger zone, huh? Okay? So if it stays above 160, okay, I will make my money. Okay? If it goes below 160, then I'm in trouble. So I must cut loss the moment it hits 160. Is that clear, everyone? Now, what is the chance it will go below 160? What's the chance? There, the software already calculate for you the probability. What's the probability that it will go below 160? It is about 29% chance I will lose money. Okay? And what's the chance it would stay in this zone? If you add 23, 18, okay, you add all this together, it is basically what? 71%. So that's why I say this trade has a 70% win rate. Now, this 70% is not something I'm guessing. I didn't pull it out of my backside. This is calculated by the software. Understand, everyone? Okay. Now, if the share price drop below 160, okay, see, if it drop below 160 and you don't do anything, you let it expire, how much will you lose? You would lose this amount. What is this amount? Now, I'm going to put my mouse here. Can you see this box on the left? Can you see this box on the left? Okay. Now, can you tell me the number you see on the box, the green number? What does it say? That shows you the profit and loss. Can you see it's minus 398? Yeah. So that's why I say you can lose $398 if you allow the price to drop below 160 and it expires here. You can never let that happen. You understand? Okay. So I repeat, the green line is your profit or loss at expiration. Now, can you see this purple line here? Can you see this purple line? This purple line is your profit and loss on this date, which is today, right? Or rather tomorrow, which is 24th of November. Understand? Okay. Now, right now the share price is here. Okay. So right now you're not making a profit, right? You are not making profit, right? Zero. You have got no profit. Now, notice what happened as time passes. Notice what happened. Oh, sorry. Before that, before I show you that, I show you something first. Now, let's say you enter the trade, and immediately when you enter the trade, okay, the share price straight away drop to 160. What do I do? Let's say the moment I enter the trade, the price dropped to 160. I will close the trade. How much would I lose? I will lose this amount. Okay, so what is this amount? I put my mouse here. You tell me, what does the number here say? What does the purple number say? Minus 106. Can you see? Okay. Minus 106. And if this is a winning trade, I make 102. So in this case, what happened? If I win 102 or close to 102. If I lose, I will lose about 106. So I'm risking roughly $1 to make another dollar. Okay, I risk $1 to make $1. But my chance of winning is 71%. My chance of losing is 29%. Is that a pretty good deal? Is that a pretty good deal? That's not a bad deal, right? Okay. Now, what happens? Okay. Now, okay. Now, what happens as time passes? Okay. Now, notice this is 24th November. I'm going to go to 25th November and 26th. Now, as time passes, notice what happens to the purple line. Notice what is happening to the purple line. Oh, notice what's happening. What's happening to the purple line? The purple line is converging to the what? Is converging to the green line. Yes or no? Okay. So you can see that, for example, by the 30th of December, okay, the purple line has shifted upwards, right? So let's say on the 30th of December, the share price drops. The share price drops to 160 and I cut loss. Now, do I lose more or do I lose less? Okay, I'm going to put my mouse here. How much do I lose now? Look at the loss now on the bottom left. Now, can you see that I lose $86 when previously I lost $106? Can you see that? So why I like this strategy is that as time passes, I lose less and less. That means my risk goes down as time passes. You follow what I'm saying? Okay. So, okay. So in this case, if I lose $86, okay, out of the $102 that I collected, how much do I lose? My loss, I lose 0.84 of the premium that I collected, right? Or I say I lose 0.84 of my credit. Understand? In this case, if I lose $106, I'm losing about one time credit. Okay. Is that clear, everyone? So when you buy options as time passes, you lose more and more. But in this case, because I'm selling options, as time passes, I lose less and less. You follow? Okay. Now, eventually, as time passes, you look at the purple line, right? Okay. Now, on the day of expiration, what happens? On the day of expiration, the purple line will become the green line. And notice, what is my break-even point now? My break-even point is no longer 160. Now my break-even point is here. Can you see? My break-even point is now about 159. You clear? Is that cool? Okay. Now, currently, I actually have got two trades that I just entered. Okay. Now, this one is a very risky one. So actually, this strategy, Bang and myself, we are still testing it. We have not taught this strategy yet because it's still quite risky and we are testing to make sure it's safe enough before we teach it. That's why I'm not going to mention this one, all right? Now, look at this one. So this one, you can see I entered this one, all right? I entered this one. I sold this Amazon. Wait, okay. I sold this Amazon put option Okay. I sold 10 contracts. Can you see? 41 days to expiration. I sold the 200, I bought the 195. So my total premium I collected is 101. Now the market price has dropped to 84. Is that good or bad for me? I sold it at 101. Now it dropped to 84. Is that good or bad for me? Is that good or bad for me? That is good, right? Because the more it drops, the more I earn. So you can see now I made $170. Okay. Now, when this goes to zero, I will make 101 times 10. I sold 10 contracts. You see, I sold 10 contracts. So when this goes to zero, I'll make $1,000. But now I've only made $170. So once it hits close to 1,000, I will close the trade. Okay. Now, how do I close this trade? Very simple. I just highlight this thing, right click, and buy back. Right. I buy back the put spread, right? So I entered by selling the put spread. I close it by buying back the put spread, right? You buy it back. Okay. So basically what happens, I buy back the 200 put and I sell the 195. I reverse the order. Yeah. Now, again, if you're a bit confused, don't worry. In the options trading course and the options mentorship program, we go step by step. We show you click here, click there, click here, right? We go in detail. Today, I only have 3 hours, so I can only share with you all these things as much as I can, but the technical details, that is in the mentorship program. That is in the options wave rider mentorship and in the course. Understand? Clear? Is this interesting, guys? Do you like this strategy? Okay. So why I love this strategy, okay, why I love this strategy is because I don't have to be right on the direction. Okay. Now, remember, trading is a numbers game. Okay. So when you do this, you are no longer the gambler at the casino. You become the casino. You're the house. Okay. Now, as a casino, will some players make money from you sometimes? Will some players get lucky and then they make money from the casino? Yes or no? Yes, right. But over the long run, as many players play in the casino, will the house always win in the end? Will the house always win? Yes. Why does the house always win? Because the house has a statistical edge over the players. So same thing. When you know how to sell options using the right rules that we will teach you, you are trading with a statistical edge. Okay. So let's look at the numbers. Let's say you do 100 trades. Okay. You do 100 trades in 1 year, which is about what, 8 trades a month. Okay. Let's say, for example, right? And you have a 70% win rate. What does that mean? So that means on average, you will have 70 winning trades and 30 losing trades, right? Now, when we win, we earn the credit, right? The premium, let's call it credit, okay? Now, just now I showed you that when I lost one-time credit, right? So I make $100, so $106, but when I lose $102. Now in reality, you may lose more than that. You may lose more than that. So to be conservative, okay, I'm going to put a loss per trade of 1.2 credit. That means when I win $1. When I lose $1.20. Okay. Okay. So I'm going to put that as the scenario here. So the 30 trades you lose 1.2 credit. That's 36 credits. The 70 trades you win one-time credit. Okay. So net, how much you make? You make 34 credit or C over 100 trades. Now, let's translate this to numbers. Let's translate this to numbers. Huh? So let's say, okay, remember just now, each contract I entered, what's the premium I collected just now? Each contract for NVIDIA? Each contract I collect $106, right? Okay. So if I wanted to collect $200, how many contracts do I sell? How many contracts do I sell? I sell 2 contracts, right? So how many contracts you sell depends on your account size. okay, how big your account is, okay? So let's say each time I enter, I aim to collect $200, okay? I aim to collect $200. And I know that if I lose, right, it's a losing trade, I will lose about 240, okay? So these are my odds. So again, 70 wins, 30 losses. And so when I lose, each time I lose 240. Each time I win 200. So net, I make $6,800. Okay? I make $6,800. Divide by 100 trades. So on average, I'm making $68 per trade. So is this fast and quick money? No. Remember, whether you're trading or you're investing, there's no such thing as get rich overnight, get rich quick, get rich fast. No, right? It is slow and steady with the odds in your favor. So we play the probability game. Understand? Some of you are asking, how do I get 70% win rate? Again, remember, the 70% win rate is not something that I invented. I just anyhow guess. The 70% win rate is based on what? Is based on what? Is based on the probability calculated by the software. Okay? Can you see that? It's calculated. It's all based on delta. That's right. It's all based on delta. Okay? So this is one of the ideal trading strategies. Why? Because it does not rely on predicting the stock price direction accurately. You don't have to predict where the price is going accurately, right? It is mathematically proven to have a high win rate of 70 to 75%. Now, there's another version of this strategy called the bull put spread extreme. For that one, I sell the put not at 25 delta, I sell it at 10 delta. I sell it at 10 delta. So remember just now I showed you, okay, I didn't show it. So if I sell it at 10 delta, my win rate would be over 80% win rate. Okay, so this is taught in the options course. Okay, and how long do you need to monitor? Okay, now for me, I don't look at it more than half an hour a day. I don't look at it for more than half an hour a day. It's not required, right? But if you're more hardworking like Pham Van, who trades 26 strategies, then he spends about 1 to 2 hours a day. Okay, 1 to 2 hours a day. When the market opens in the US, that is at night in Singapore, right? So 1 to 2 hours, you can do a lot. For me, half an hour, I close shop, right? I'm very lazy. Okay. Now, so you can see, all right, this is my students. They said, this is my options trading account. It's a small account. I started with 2,000 in January and I added 12,000 to the account in February. So total, he put in a 14K. Now it grew to 50,000, right? All investors need to understand options. It helps to minimize risk and maximize your return. If you don't understand options, it's like going to war with knife and spear. And this is his account. He made 40,000 net profit in his first year using what I taught you, right? The bull put spread. All right. This Hi Master Bang and Adam sharing my year-to-date result up 89%. No words can express my gratitude for all your guidance and teachings to make this happen. Right? My favorite strategies are bull put spread extreme, and earnings probability spread. All right. 6,000 profits from 3 bull put spread extreme I took on 2nd November when markets were falling hard. Great payoff in just 2 days. This Muta here. All right. So why learn options? Why learn options? Why don't we just trade stocks? Why learn options? Okay. Because options allow us to profit under all kinds of market conditions. It is very flexible. It's like a Swiss Army knife. There are different option strategies you will learn to use in different market conditions. So whether the market is very bullish, market going up, or market going sideways, or market bear market, whether it's high volatility or low volatility, there are different strategies that you can use for each situation. So like I said, it's like a Swiss Army knife. It's very flexible. It increases your flexibility. Yeah. And when used properly, options allow you to lower your capital. It allows you to use less capital to get the same or higher returns. And when it comes to short-term trading, it can increase your win rate. If you just trade stocks, what's your best win rate? I think Alson may have shared with you yesterday. If you just trade stocks, what's your best win rate? Your best win rate is 50 to 60% win rate, right? But when you use options like the bull put spread and bull put spread extreme, your win rate can go to 70, 80%. Why? Because you don't have to be right on the direction. That's the best thing about it. Okay? Now, so you can use options whether you are a long-term investor or you are a short-term trader. Okay? So in the options mentorship program, the Wave Rider, you're going to learn over 26 strategies, some for investors, some for traders. Let me quickly give you an overview. So for long-term investors, you're holding stock for the long term. How can you earn extra income from your stocks? How can you turbocharge your returns? Number one is by selling covered call options at the right time. Yeah, so we'll cover how to sell covered call options on some of your stocks. Number two, you can sell cash secured put options to get paid waiting for the stock to drop to the level you want to buy more. The third method that you can use, but this method I don't really use, but you will learn it anyway, which is how to protect your portfolio during bear market. So if there's a bear market, there's a recession, and you want to buy insurance, you want to buy put options or put debit spreads, you're going to learn how to do that as well, right? This is what we call hedging, how to hedge your portfolio using options. Now, this is for investing. For short-term trading, whether you trade stocks, you trade currency, you trade ETF, you trade index, you can use options instead. So first, you can use options for directional trading in order to get a higher win rate and a lower capital requirement. So you will learn debit spreads. What are debit spreads? We call it bull call spread and bull call spread and we call it bear put spread, right? Then you learn put credit spreads, like the bull put spread and the bear call spread. You learn diagonal spreads. You learn bullish synthetic and bull bunk. This one is also one of my favorites. I use this a lot. Later, if I've got time, I may talk a bit about this. If you guys want, I'll look at the time. If there's time, I'll talk a bit about this because I use this quite a bit as well. Okay. Next, you can use it for non-directional trading. So are there times when the market is going sideways? When the stock is going nowhere, right? And if the market going sideways, going nowhere, you can use strategies like Iron Condor, Snipex, and calendar spreads to profit when the market is going nowhere, right? And finally, you learn event-based trading strategies. Like, that sometimes the Fed is going to announce interest rates. And you don't know, after they announce, is the market going up or going down? You can't predict, right? But whatever happens, guess what? The volatility of the market will always go up before the announcement. So we use this thing called earnings probability spread and earnings sniper spread to profit on the spike in volatility, regardless of whether the company beat earnings or miss earnings. We don't care. All right. So these are the 26 strategies that you will learn in the Wave Rider options mentorship. So for example, again, if the market is going up slowly, moderately bullish, then you can deploy bull put spread, which I just shared with you today, bull put spread extreme, and cash secured puts. If the market is very strong, very bullish, then use bullish synthetic or bull bunk. Use bull call spread or callback ratio. If the market is going down very slowly, you use bear call spread. If the market is falling like a rock, use bearish synthetic or bear put spread or put back ratio. If the market is going sideways, you can sell covered calls or diagonal spreads or calendar spreads or snipex or iron condors. Bang Fan Ban, the grandmaster, he trades everything. Everything you see here, he trades everything every day. Okay? I'm the lazy one. I only trade like three. He trade all. Okay? Special events, earnings sniper spread, and earnings probability spread. By the way, some of these strategies you cannot learn anywhere. You cannot learn anywhere else. You know why? For example, this strategy here called the bull bang, and this one called the snipex, and there's another one called the bull bang collar, and there's another one called crouching bull spread. You cannot learn anywhere else. Why? You know why not? Because Bang Fan Van is the inventor of these techniques, right? That's why I call him a grandmaster, because he doesn't just teach techniques that people use, he creates his own techniques that you can't learn anywhere, right? And he's actually in the process of putting a trademark on it so that no one else can teach that same thing, all right? Okay, pretty cool stuff. Okay, so you can see a lot of my students, and for some reason, I don't know why, most of my students who share great results, most of them are women. I don't know why, which is great. I love it, man. Okay, woman power. All right. This is Cheryl. She says, "Dear Bang, you know, she says I'm your first batch of students in 2017, right? Blah blah blah. It took a couple of years, but this slow-witted student, no, she's not slow-witted. She's just being humble. Is proud to share that 2024." I got 60.7% return across 205 trades with an average win rate of 76.4%, right? And this is Suren. I want to take a moment to express my heartfelt gratitude to Adam and Bang Fan Ban. I achieved a 36% return in 2024, a remarkable milestone of 101% return on my investment since I subscribed to the value momentum investing and iron striker options course in 2021. Okay. So, very, very cool stuff. Okay. I don't know. Should I share this one with you? You guys have room for one more thing? Still have room, Okay, I'll do this fairly quickly. I'll do this fairly quickly. Now, by the way, YY, who is our other options trainer, he's going to share a lot more about this. And he's also very, very, very profitable. In fact, my company account, he's the only one that trades it besides me. And he has grown my corporate account by easily 30-40% almost every year, right? For the last couple of years. So you definitely want to listen to YY. Okay. Now, so let me share with you very quickly this thing called a bullish synthetic spread. When do I use this? I use this if I think that the price of a stock is going to go up significantly. Okay, it's going to go up significantly, right? And you may say, Adam, why don't you just buy the shares? Oh, why don't you just buy shares? Yeah, you can buy the shares, but this method allows you to buy 100 shares of a stock at 1/4 the cost, at 1/4 the capital required. So it's more capital efficient. Okay. So let me give you an example. Let's look at Palantir. Let me show you this very quickly. Okay. Let me show you Palantir. Now, if you look at Palantir, you can see that it recently dropped, right? Okay. Now, if let's say you think that Palantir is going to bounce back. Okay. By the way, this is what pattern you learned from Alson? This is like a what pattern? This is a bear trap, right? A pin bar. Okay. Now, this is a simple bear trap, right? Now, if you think Palantir is going to shoot up, okay, but you don't want to buy the shares because maybe you don't have enough capital and you just want to trade it for short term. Now, this method is more for trading, not for investing, as for trading, right? What could you do? A lot of people, they will just buy a call option, right? You'll buy a call option. Now, what is the problem with buying a call option? How many of you have bought call options before? Or you buy a leap, that means a call option with a long expiry date. Okay. Now, for Bang and myself, we don't like to buy call options. Why? Why don't we like to buy call options? A call option gives the buyer the right to buy 100 shares of a stock at the strike price before the expiration date. We don't like to buy call options by themselves because, number one, when you buy a call option, you pay a very high what? You pay a very high premium. So to make money, the share price has to go up enough to cover the cost of the premium. If the share price goes up a bit, you also lose money because it can't cover the premium cost. Number one. Number two, when you buy an option, you suffer from time decay. It means every day the option loses time value. It lose value, lose value, lose value, lose value until it expires. So even if the share price goes up, but it doesn't go up fast enough, you also lose money. Okay? So in other words, when you buy a call option, to make money, not only must you be right on the direction, but you must be right on the speed. It must go up very fast before it expires, and it must go up enough to cover the cost of the premium. So your chance to make money just buying a call option is very low chance. It's like striking the lottery. You understand? Okay. So let me give you an example of Palantir. So let's say for Palantir, I buy a call option. Let me show you what will happen if I buy a call option. Now, if you buy a call option, remember, options lose their value the fastest in the last 30 days. So you must always aim to sell the option for profit 30 days before it expires, because in the last 30 days, it will lose value very fast. So when we buy a call option, you have to buy more than 30 days, preferably 60 days. Okay, so you get out by the time it hits the last 30 days. So we don't have 60 days here. We'll choose this one, 16 January. Okay, now I'm going to buy a call option at near the strike price, 156. So I'm going to buy a call option at 155. Okay, so I'm going to buy a call option here. Now you can see how much does it cost to buy this call option. How much does it cost? Very expensive, $15.10 times 100 shares. How much must I pay? How much must I pay? I must pay $1,500. Okay, to buy this option. This I must pay 1,500, right? Which is very expensive. Okay. Now let's look at the profit and loss. Okay. Let's look at the profit and loss. Okay. Are you guys with me? Okay. So now this is the price of Palantir. Can you see? This is the price. Now, again, this is the zero line. Remember? Anything above this is profit. Anything below this is losing money. Okay. So if you buy this call option now, you are here, right? You are here. You're hoping the share price will go up. If the share price goes up, you make money. Share price goes down, you lose money. Okay. Now, let's say you think that the share price will go to 173. Okay. Now, if it goes to 173, right, how much money do you make? I put my mouse here. Tell me what is the price you see in this box. How much money do you make? 1158. Okay. So you make 1158. Right? Now, but what if the price drops? What if the price drops to 147? And let's say you cut loss here. Let's say you cut loss here. How much do you lose? You lose 394, right? Okay. So you lose 394 if you're wrong. If you're right, you make 1158, right? Okay. Now, let me tell you the bad news. The bad news is this purple line that you see will keep dropping every day because the option loses value. So notice what happens. As time passes, look at what happened to the purple line. Okay. What's happening to the purple line? Sorry, now it's 24th November. Okay. Let's say it dropped for, let's say after 20 days. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Okay. Now, after 20 days has passed, what happened to the purple line? Can you see the purple line drop down already? Because it's losing value, right? So now you don't lose 394. How much you lose now? You will lose 705 here, right? And here, even if it reach your profit target, you only earn 855. Now is it worth it? Now is it worth it? You lose $700, you only make 855. Is it worth it? And then if the price keep dropping, what happen? What if the price keep dropping? What if the price keep dropping? As time passes, even if the share price stays the same, you will end up losing 1,005. You see? So, and you can see that to break even is very difficult. You can see that your break even price is here. No? Can you see? That means for you to break even, Palantir needs to go up above 170 for you to break even at expiration. Because the premium is so high, you have to cover the premium cost. Do you see what I'm saying? Okay. So instead of doing this, what do we like to do instead? What does Bang and I like to do? So if we think that Palantir is going up and we want to trade it for short-term trading, instead of buying a call option, okay, let me explain here, okay. Instead of just buying a call option, what do? We will simultaneously sell a put option at the same time. Why? Because when you sell a put option, you collect the premium. And when you buy a call option, you have to pay the premium. So by selling the put option, the money that you collect will finance the call option. So you get a free trade. Free trade. So we don't pay any money. Instead of paying 1,005, we pay nothing. Isn't that a better deal? But they must both expire on the same day. So let me show you how I do this, okay? So what I'm going to do is I'm going to buy the 155 call, okay? Buy this one. I pay 15.10, right? But I'm going to sell the 155 put. Okay? Now, I get a debit here. I don't want a debit. Okay, so let me try the 160. I'm going to buy the 160 call and pay 12.70. I'm going to sell the 160 call and collect $16. Wow, now better still. Okay, check this out. So what I do is this. I sell the 160 call. Sorry, I buy the 160 call, I sell the 160 put, and I collect a credit of $4. So what does it mean now? That means now when I enter the trade, not only is it a free trade, I get paid $400 to enter the trade. Isn't that nice? I get paid $400 to enter this trade. Now, what does this trade look like? Let me show you the profit and loss. This is what it looks like now. Okay, it's one straight line, which is equivalent to what? Okay, so when you buy a call and you sell a put at the same strike price, okay, listen carefully. It is equivalent. It is equivalent to buying 100 shares. It's the same thing. The profit and loss is exactly the same. The only difference is that by doing this, I only use up 1/4 of the capital and I'm paid $400 on top of that. Isn't that a better deal? So now let's see what happens. Huh? If now Palantir goes up, right? Palantir goes up from 156 to 173, how much do I make? Put my mouse here. How much do I make? I make 1728. Okay. Now, if Palantir drops to 147.5, I will close the trade and cut loss. You must cut loss if it's a trade. Okay. If it's a trade, must cut loss. Now, if I cut loss here, how much do I lose? I lose 823. Now, is that so? What is my risk to reward? I'm risking $800 to make 1,007. I risk $1 to make $2. Is that a pretty good trading risk to reward? Yes or no? And do I have the risk of the time decay? Do I have the risk of the purple line dropping? No, there's no risk because you can see the purple line is already at the green line. You see what I'm saying? So these are the very powerful techniques that Bang and I use. And that's why we're able to make money in options every year. So far, cross my finger, huh? Every year. Bear market, bull market, we make money, right? Because we know how to optimize our options trading. Okay. What if the sell put is assigned? There's the put can only be assigned if the price drops and the put delta goes to 80 to 90, right? Which would not happen if you close the trade at 147.5. If you close at here, it's very, very rare it's going to get assigned. But even if it gets assigned, who cares? Then just sell the shares, right? And then reinstate the put, right? So all these things you're going to learn in the course. Okay, so let me just wrap up. I hope you learned a lot so far. I hope it's been useful. Okay. So the great thing about learning to trade, and I teach this to my daughters as well. I say that, you know, my two daughters, they're in university, they're studying business and marketing and communications. I say, great, go and study all these things, right? But I tell them that at the end of the day, right, how do you agree that nowadays, even you go to the best university, you get a best degree, you spend 100K, 200K on your degree, your master's, but it's no guarantee that you will get a job for life. How do you agree with that? You can spend 100K, 200K, go Harvard, go Oxford, no guarantee you can get a job for life, right? And the older you get, there's a chance that you're going to be replaced by someone younger, cheaper, faster. Last time from someone in a different country. Now you get replaced by AI, right? So the only way to guarantee your financial security, your financial freedom, is to learn how to invest and to learn how to trade. That's the only way to guarantee it. Okay. So I tell my daughters, I say, it doesn't mean that you don't work. You must still work. You must go out there, get a job to make a difference in the world. Okay. But that cannot be your main way of security. No. Your main way is through the financial markets, right? So trading is the only skill that can guarantee you an income for the rest of your life. Because once you learn this skill, no one can take it away from you. No one can take it away from you. Okay. So how do we become proficient at trading? How do we become proficient at options? So we have specially developed a mentorship program called the Options Wave Rider Mentorship Program. So let me share with you what it's all about. Now, before that, I've mentioned him many times. I'll mention him again. Okay, this is Bang Fan Ban, and he is our resident options grandmaster. He is also, I would consider him my sifu in options. Okay, now I'm his sifu in investing stocks. He's my sifu in options. If you don't know, Bang was actually with Procter and Gamble as a senior finance manager for over 26 years, right? And he retired from his employment about a year ago. Okay. Today, just on his options profits, and he'll show you later his options profits, he makes 5 times more than his total income from Procter and Gamble. He earns 5 times more, right? And the best part is he now doesn't have to go to work, right? He spends all the time with his family. Actually, he could have retired easily about 6, 7 years ago, but he chose to stay because he loved his work. But now he retired because the time commitment that he has now to teach the community is very high. So he decided to spend his full time to now teach the community instead of staying in his job, right? So yeah, Bang makes over $1 million a year, all right, in options. So he makes more than me in options, but of course I make my money in stocks in a different way, right? Okay, then you've got YY, who is our other mentor, right? YY, like I said, he's one of our top trainers and traders. He manages my corporate account, trading options for my company. Last 12 months, he did 66% return, 88,000 in profits. This is his own personal account, by the way, right? For my company, he makes us a few $100,000 a year. Okay. Now, so what is included in the options mentorship program? First, you'll get our two award-winning courses. Okay. So there's the first course, which is called Iron Shell. Iron Shell is the options course level 1. Iron Striker is the options course level 2. Now, these courses are pre-recorded. They are on-demand courses. That means you can watch anytime, you can watch anywhere. Okay? At your own pace, at your own time, and you will learn, again, 26 different option strategies. So what is covered in level 1 in options Iron Shell? So first you learn all the option basics. We assume you know nothing about options. You learn about what's a call option, what's a put option, right? How to set up the charts and how to use the different trading tools, okay? Then you learn option strategies for long-term investors. So you learn about how to sell covered call options to earn extra income. You learn to sell cash secured puts, which I gave you an introduction of today. Then you learn more aggressive, bullish, and bearish trading strategies like bull call spread and bull put spread. YY is actually using this a lot. Okay. Then you will learn moderately bullish and bearish trading strategies. These are my favorites, which is the bull put spread. Okay, bear call spread, I don't use it as often. Okay. Then you learn the tools of the trade, like basics of technical analysis, how to find trade setups, as well as what to do if you are assigned the shares prematurely, right? How to manage early assignment. Yeah. You also learn things like the cash flow wheel and how to hedge your portfolio with put options during bear markets. So that's level 1. Level 2 is called Iron Striker. So you learn more advanced techniques like the Jade Lizard, which I also like a lot. I use that once in a while. The crouching bull strategy, the bull put spread extreme. This is my invention. I'm very proud. I invented something. All right. This is Bang's invention. This is Bang's invention. This is Bang's invention. All this you can't learn anywhere because we created it, right? We created these strategies. Diagonal spread, this one is quite well known, right? But the way Bang trades it is quite different. So he'll show you his tips and tricks of how to do it more effectively, right? Market neutral strategies, Iron Condor, calendar spread, and the Snipex that is invented by Bang. Next, you have got aggressive strategies like synthetic long and short, which I just showed you just now with Palantir, and the Bull Bang strategy. Then special situations like earnings spread, which you can use to trade alongside company earnings release. And we spend a lot of time on trading psychology and risk management, how to manage your risk, because there's no such thing as 100% win. You will have losing trades. You will have losing trades. But as long as your winning trades are more than your losing trades, that's how you generate a profit, right? So you need to manage your psychology to know when to cut loss, to know when to get out of a trade, right? And how do you build a profitable options trading business? Part six, how to roll options. Part seven, all about how to use the different brokerages. We will focus on Tasty Trade and Interactive Brokers in our trading of brokers, right? You learn other techniques like back ratio and collar as well. This is Alexander, one of our new students. He said, I'd like to take this opportunity to express my gratitude to Adam and Bang. By incorporating options trading into my strategy, I've not only recovered all my previous losses, including cost and subscription fees, but also achieved a decent profit. My God, 324% return, right? My investment and trading journey would never have been as successful without your constant guidance and invaluable lessons. And again, a lot of that, I'm not going to go through too much of it, right? But you can see all our students all sharing. Now, when you first start trading, especially options, here are some common concerns people have. Number one, I'm a total newbie, right? What if I fail, right? This is too complex. I'm a slow learner. I'm afraid to start. What if I made a wrong trade? We know. We know these are the common concerns. By the way, how many of you have ever wanted to be an entrepreneur? You wanted to run your own business, okay? Anyone? Great, okay? Trading is like a business. Trading is like any other business. But the best thing about trading is you don't need rental. You don't need to pay staff salary. Okay, there's no GST. Okay, it's all tax free. That's the great thing. Now, if you wanted to start a restaurant or start a shop, all right, is it very risky? No? Yes, right. In fact, how much capital do you need to start a restaurant in Singapore? Or in the US or Australia, right? Do you need a few hundred thousand? I think Singapore, you need at least 500,000 to 1 million, right? To start a restaurant, renovation and rent and stuff like that, and stuff, right? And honestly, what is the success rate of a restaurant or a shop? What do you think is the success rate? I can tell you less than 5%. Less than 5%. Okay, 95% of people who start a restaurant, start a shop, will lose all their money. 95% will lose all. Only 5% will make it. It's very, very scary, right? Now, how many of you wish, right, that before you started a restaurant, you could start a demo restaurant where you can set up a fake cafe with fake menu, with fake customers, and only when you can make money consistently, then you use real money. Wouldn't that be great? But it's not possible, right? But in the trading world, is that possible? In the trading world, is that possible? Yes. So I tell all my students, when you first learn trading, it's like flying a plane. You do not fly with real passengers. You get into the simulator. You must take off and land many times until you can land safely. Yes or no? So when you first start trading, do not use real money. Do not use real money because you will make mistakes. I guarantee that. When you first trade, use a demo account. Use virtual demo money. Only when you can make money consistently, then you use real money. Is that clear? So that's the perfect business. Before you use real money, you make sure your cafe can make money. Make sure there's customers first. Then you do it. Okay? So what you need is a system to guide you through the entire process. Now, each mentorship lasts a year. Okay, lasts a year. But with some bonuses, we're gonna give you I think it's about 13 or 14-month mentorship, right? Because that is the time that most people need to get proficient. Okay. So the first year, online mentorship, you'll be mentored mainly by Bang Fan Ban, our grandmaster, and YY, and also myself, and many of our coaches. Okay. So what does the mentorship include? Number one, it includes an onboarding workshop. So for beginners, there's an onboarding workshop which is live. This is conducted live once every 2 months, where you learn how to set up your trading account, how to place your first order, how to use our option trading tools, and more to get started, right? So this is conducted by our resident trading coach, YY. Every 2 months, live onboarding workshop. Okay. Then every month, you will have deep dive sessions with Bang or one of our other trading coaches, which is YY, right? So lesson recaps, strategy application, detailed case studies, and latest market examples. These are all live. When the market opens, you can see live trading. All right. And then every month, Bang will also do a monthly e-gathering and live trade hunt, where when the market is open live, he show you how he looks for trades, how he hunt, how he enter, how he exit, whether profit, loss. You will see the whole process live, right? So join Bang online every month, watch him hunt for trade opportunities in the live market, watch his thought process, how he manages the trades, send in your trade ideas, and get chance to have him review your trades on the spot. Then there's a special private options discussion group on Discord. And again, they discuss 7 days a week, 15, 16 hours a day. They are discussing trading ideas, right? Where you get your trade setups reviewed by coaches, you can post questions, get timely updates for what's happening in the markets. And every quarter, I will do a special live trading psychology workshop with all of the members. All right. So my focus is on trading psychology. Okay. So to recap, the options Wave Rider mentorship, number one, includes the 2 courses, the level 1 course and the level 2 course. Oops, sorry. Now, the courses, you will get a lifetime access. Okay. Lifetime access. That means you can watch anytime, anywhere. It never expires. Okay, it never expires. Okay, it'll be with you for eternity. Okay, now the live mentorship, that is a 1-year access. Okay, so this is 1-year access, which is the monthly live e-gathering and live trade hunt, the monthly strategy deep dive webinars, right? The options trading discussion group, the quarterly trading psychology class, and the onboarding workshop for beginners. So this is a annual 1-year access. Okay, the normal retail price for this mentorship for 1 year is $2,997 US, right? For a 1-year mentorship plus courses for lifetime. Okay, so I think that nowhere else can you get this kind of value. Okay, if you enroll now, you get 50% off. So your tuition fee for everything is only $1,498 US. And this is the cheapest price you can ever get in the entire year, because black market is where you've got the biggest discounts, right? And this is the greatest value you can get. Now, if you want to renew for more than 1 year, you say, Adam, I want to be mentored for the 2nd year or 3rd year, you can, right? And there's an extra $899 US if you want to do 2nd year renewal onwards, and it's up to you, right? So that is the options Wave Rider mentorship, only $1,498 US. Yeah, and all it takes is a few good trades to make back your mentorship fees. Like our students, he said, Asanka said, I'm pleased to let you know my portfolio has grown 28% in the last 7 weeks purely from options trading, which helped me to recover all my course fees many times over. Right? People like Daniel said, my accountant from minus 7K to plus 65K realized gain within 3 months with 17,000 unrealized gain on the positions. What I've learned from Master Bang, from the course and e-gathering, is a complete game changer. I never trade the same way I used to. To those who are on the sidelines of signing up, I can be a testimony that the investment for these courses are paid back within a month. Now, of course, it's not a guarantee. Not everyone does that, but that's his sharing. Okay. And of course, we have a lot more, right? Now, for some of you who say, I want to watch how Bang trades every day. Okay, I want to see what he buys every day, what he sells every day. Every day, I don't want once a month, I want every day. And I want Bang to do all the research for me. I want to leverage on his research. Okay, then we have got the Options Tactics Playbook, or the OTP. So the OTP is not a course. It is not a course. the course was what I showed you just now. This is watching how he trades every day, and you get notifications of all his trading, Bang Fan Van, all the strategies that he trades. Okay, this is an annual membership. Now, let me just say this. You must first take the course and learn the strategies before you can follow him and see how he trades. If you take this options tactics playbook, but you don't know the rules, you'll be totally lost. Okay? So for those of you who are taking the option tactics playbook, the membership will only start on the 1st of January. Okay, let me double check. Yes. That means next year. Why? Because we need you to have time to learn the course materials first, to understand the strategies first, then you get into the OTP. So OTP, I say again, the access will only be granted next year in January. Okay? You can't get this right away. All right? So for the OTP, you will get monthly market updates and monthly portfolio review, and you get daily notifications of all his entries, exits, and position adjustments, right? These are almost every day, right? Every day he trades, you get every single notification. And Bang will share more with you because he's coming up very soon in the next half an hour. So do watch his webinar as well. Okay? He's got a new powerful strategy that he's using right now, right? Say, dear Bang, I just did my first renewal for OTP. Over the last year, you opened my eyes on how to generate positive data on long trades that usually eat up time value. Amazing. I love your approach on entering trades when stochastics is sloping up and coming out of the oversold region. Having traded options for 3 to 4 years now, I cherry pick the trades that I like from the many that you put on. I usually stay away from jade lizards, for example, as they hurt me a lot, but I only trade one contract at a time. According to my trading log, I made 1,000 on my OTP account of over 45 to 50K. Sorry, he made 11K, not 1K, sorry, right? So these are all the trades that Bang enters, and he shares with you again why he entered, why he cut loss, why he took profit. So it's like apprenticeship. You get to watch a master in action, right? You get to watch a master in action, and I learned a lot from him as well. Okay. Now, if you want to get the options Wave Rider mentorship and the option tactics playbook together, all right, we have got the ultimate options bundle. We'll be bundled both together if you want them both, all right? So for the ultimate options bundle, again, you get the 2 courses, lifetime access. You get the mentorship, which is 1 year access, and that you get the option tactics playbook 1 year access. Okay, again, bear in mind that this one, your access will only start in January 2026. Why? Because if we give you access now, you'll be lost. You won't know what he's doing, right? Because this one, you will get access now. So you can start learning for the next 30 days. Then you know how to trade options. Then you watch how he trades every day. Okay? So the normal retail price for this is 2,997. This one, the normal retail price is 2,005. So the total value is 5,497 US dollars. But for this bundle, guess, right? You get 45% off. So it's only 2,997 US dollars for this entire bundle. And again, this is the best deal you can ever see for options, right? So if you're interested, you can scan the QR code. Okay. So if you only want the options Wave Rider mentorship, then scan the QR code on the top. That's 1498. Okay. If you want to get the ultimate options bundle, which is the Wave Rider mentorship plus the options tactics playbook, where you watch him trade every day, then that is 2,997, right? So either select the one on the top or the one at the bottom, right? Both of them are great deals. Okay, guys? So I'll give you some time to decide which is best for you, either top, bottom. Now, some of you say, what if I choose the top one and then I want to upgrade to the bottom one? Yeah, don't worry, we can do that for you later. If you want to take the top one first, you can, right? But my opinion, I will take the bottom one because I want, everything now. Okay, and that's me, right? For a la carte OTP, will it start immediately? Then you can check with my team. My team will be there to help to answer questions, right, on the admin stuff, right? So I'm going to take a 5-minute toilet break myself to give you a chance to enroll in either the Options Wave Rider Mentorship or the Ultimate Options Bundle. Again, you can scan the QR code. Oh, I forgot to mention bonus, okay? When you enroll now, okay, for the Options Wave Rider buyers, you get free extra 2-month access to the Wave Rider Mentorship. So it's total 14 months. 14 months. For the Ultimate Options Bundle buyers, okay, you get 2 months extra access to the Wave Rider and 2 months extra for the Options Tactics Playbook. So both are 14 months access. Okay, 14 months. And again, we've got all our students and saying that it's one of the best decisions they made learning all these things, right? Let me just skip all this. Too many. Okay, so here we are. These are the 2 bundles that you can go for. All right, so I'll take a quick 5-minute and I'll come back in a while and I'll see if there's any questions that I need to answer. I'll answer. If not, my team and my staff will help to answer your questions as well. Yeah.
Hello everyone. Okay, I think Adam went for a toilet break. Since Adam went for a toilet break, I think let me chime in for a while to actually address a few of the admin questions that is coming in. Okay, give me a moment. Let me check. Uh, okay, I think before I begin, I would like to actually introduce myself. My name is actually Nazri. I'm actually the one who is also assisting Piranha Profits on the customer experience. So I think let me just go through some admin Q&As to see if there's anything that we would like to actually address. I think first and foremost, I think I saw a question from Ethan, basically asking what exactly will I get when I join Options with Rider Mentorship or the Ultimate Options Bundle. I think let me reiterate again what is included in the Options with Rider Mentorship or the Ultimate Options Bundle. So when you join the Options with Rider Mentorship, what you'll be getting is both the education and the life coaching you need to trade confidently. So first, you will get the full lifetime access to our Options Level 1, which is the Options Level 1 Iron Shell, and Options Level 2 Iron Striker. Then you'll also get the basically the online mentorship from us, and it's not just 12 months. If you sign up today, which is definitely a great offer, you won't basically get it after our black market promotion is over. You'll get 14 months access to our live mentorship touch points. What are inclusive in our online mentorship touch points? What is included is the live onboarding workshops every 2 months, live monthly strategy deep dive with Bang and our coaches, live monthly e-gathering and trade hunt with Bang, where you can actually see the thought process of Bang and you can see what he actually trades during this session. And also quarterly trading psychology classes with Adam. And of course, the full access to the options traders discussion group for daily support. Basically, all the sessions that are listed inside your Wave Rider portal, it will be under the webinar schedule page, where I'll be showing you later on how you can actually see once you actually subscribe to the Options with Rider mentorship, you'll get access to this student portal as well. And then for those who actually purchase the options ultimate options bundle, what you'll get is what I mentioned just now, which is the Options with Rider mentorship plus 1 year access to Options Tactics Playbook. So what's included is Options Tactics Playbook. So in this Options Tactics Playbook, on top of what you receive in the Options with Rider, in the OTP, you will receive Bank's 12 live monthly webinar reports for market insights and portfolio review. Again, if you subscribe to the Options Ultimate bundle, which is the best value, you'll have 14 months access in total. So you have 14 months access to the Options with Rider and also 14 months access to the Options Tactics Playbook. Okay? You also get real-time trade notifications whenever Bank enters, exits, or adjusts a trade. OTP trades watch list for new opportunities. You can actually see the trades watch list for Bank, and also you can see Bank's full portfolio tracker. And also for OTP, we'll have a dedicated discussion channel and also Q&A for the Discord. Okay, so let me show you what you actually receive. Let me share my screen for a while. Okay, so once you sign up to the options bundle, right? Okay, wait, first and foremost, can you guys see my screen? Okay, so let's say if you sign up for the options ultimate bundle today, as you guys don't want to miss the offer and you guys want to grab it now, I believe most of you guys are grabbing the offer right now. So you guys will receive this email once you actually purchase the options ultimate bundle. So you'll actually tell you in the email what you actually get. One is the Options with Rider mentorship, 1 year subscription, and also the Options Tactics Playbook for 1 year subscription. And it will actually tell you what your subscription support includes of all this, like what I mentioned just now. And also, just to take note, for you guys who actually purchase the Ultimate Options bundle, please take note that the OTP subscription will kickstart on the 1st of January 2026. Why? Because the reason, again, like what Adam mentioned, we want you guys to actually see the course videos first to understand the jargon, to understand the concept before actually seeing the trades in the OTP. Okay, and again, we reiterate again, as part of the purchase, whoever purchased the Ultimate Options bundle, you receive the free 2-month subscription to the Options with Rider mentorship, also the 2-month subscription to the Options Tactics Playbook. Okay, and then once you are here, you must be wondering, how can I access all this? Again, just go to and click to the Ultimate Options Bundle Onboarding Guide. In this guide, first and foremost, I think there's a PSA on top that you guys, it's important for you guys to actually read all of the basically all of the things inside this page, because the first one would be the important PSA to ensure that actually we, the Piranha Profits team, the mentors, and everyone in Piranha Profits won't personally add you as friend on Discord or personal message you. So if whoever actually does that are all scammers, so please do not reply to them. Okay, this is just a PSA. Okay, and then we'll lead you on how you can actually get all the access. All the email, all the access will be here. So please look out for this email from Teachable. We'll actually see, will provide you the course access on how you actually see the videos on the Options with Rider. And then also another email you can take a look at is from support@piranhaprofits.com here, email 4, where you can actually have access to the playbooks. The Options Tactics Playbook. Okay. Again, instruction on how you can actually access the course for the Options with Rider, and then on how you can actually access the Options Tactics Playbook here. Video tutorials are all here. Again, instruction on how you can actually join the Discord. For new subscriber, just follow the steps under the new subscriber. For existing subscriber, just follow the steps under the existing subscriber here. Follow the steps and you'll join us in the Discord community very, very soon. Okay. Okay, so first and foremost, when you actually purchase the options, either the Options with Rider or the Ultimate Options bundle, you will have access to this page, which is our student portal here. Okay, in this portal, you can actually see what is included in your purchase with the Options with Rider: the cost for Iron Shell level 1, the cost for options level 2, Iron Striker, and where all our live session that is going on, basically our online mentorship session, are all recorded and will be uploaded here. Okay. You can also see the webinar schedules over here. If you click on this webinar schedule, it will lead you to a page where you can see the webinar schedule. So just please take some time to read and get yourself used to the platform as well. As you can see here are all the webinar schedules. Okay, as you can see here, on the 24th, which is tomorrow, Bang is actually having the live trading e-gathering. So for those who actually purchase the Options Wave Rider or the Ultimate Options Bundle, you will also be able to actually attend this live trading e-gathering. But let me give you a heads up. Don't be too overwhelmed when you actually attend this session, because you guys just enroll into the courses and also the bundle. Not to worry. You can just attend if you want to and see the vibes, and also see what is being shared by Bang. Basically what's going on in this sharing, so you guys can actually prep yourself once you actually study all our courses and know what to expect when you attend this session. Okay. So please do take advantage now. As you can see, 24th tomorrow will be the live trading by Bang, and then on the December 1st would be our onboard, basically our skills revision. So Explorer skills revision means that for all those options level 1 strategies, we'll have skills revision as well for that, catered for that. So we have a session. But for those who can't make it live, please do not worry. All these are recorded. As I mentioned just now, we actually record all the live session and we upload into our portal. So not to worry. Okay. This is for the Options Wave Rider. And then, okay, let me show you an example of. Okay, let me show an example. What if you actually just joined the Ultimate Options Bundle, and what should be the access provided to you on Discord? So if you follow the steps on the onboarding page on how you can get into Discord, once you successfully join in as an Ultimate Options Bundle purchaser, you should have access to the Options Tactics Playbook Discord, and also the options trading. Sorry, for those who actually purchase the Ultimate Options Bundle, you won't have access to the Options Tactics Playbook yet. Will be given to you on the 1st of January. Like I mentioned to you, 1st of January, then you will get access to the OTP, but you will get this Discord access options trading immediately. Okay. So for those who purchase the Ultimate Options Bundle or the Options Wave Rider, please take a look and ensure that when you join in Discord, you should receive this options trading channel Discord on your Discord server. Okay, the access to that. For those who purchase the Ultimate Options Bundle, the Options Tactics Playbook will be provided to you on the 1st January 2026. So keep a lookout on that. Yeah. Okay, and also for those who actually purchase the Options Wave Rider without the OTP, just the Options Wave Rider, you will receive this email. Welcome to the Options Wave Rider subscription. Again, it will tell you in the email what you will expect from, or you will receive from the Options Wave Rider, and then will lead you to the onboarding page where you can actually follow the instructions again on how you can actually get access to the student portal, also our learning platform, and the Discord over here. Okay. Okay, let me share my screen. This is semuanya. Give me a moment. Let me share my screen. Okay, let me answer a few more admin questions before we actually head to Bang's session. For those who actually are joining in and also for those who actually want to actually listen to what actually Bang has to share, please stay in this room. Bang will be coming up next to actually assist you on to actually showcase to you on his new strategy that he's just gonna actually explain. Give me a moment. If I sign up now, how can I access the mentorship? Again, I think that's the same question. I think please follow through. As what I mentioned just now. Once your payment goes through, for those who actually purchase, you will get the onboarding email from us. Just follow the steps there. Will this help me if I'm still new to options trading? Yes, the mentorship, it's built to support both beginners and experienced traders. If you're newer to options, the structure makes it very straightforward to follow. As I mentioned just now, it's an basically, as Adam mentioned, it's a whole mentorship. It's not just a course for you to actually just learn and also follow through. So you start with options level 1, where all the fundamentals are taught clearly. And then once you're comfortable with it, you'll get the access to options level 2 as well, where it takes you into more advanced strategies and real market application. Okay. Basically, on top of that lesson, you'll also receive the onboarding workshops for every 2 months are designed to actually help newer traders to get set up. Okay. So not to worry on that. And if you're joining the Ultimate Options Bundle, which is of course the best value right now, you get a year of the OTP as well. So you get access to banks, premium monthly reports, real trades notifications, and OTP discussion channel on 1st of January 2026. Okay. Okay. For you guys wondering, Bang will also be doing the same offer later on for his option sharing. It's the same. It's the same offer as what actually Adam actually mentioned just now, which is the options with Friday mentorship and also the ultimate options bundle. So for those who's wondering, because I saw a few questions in the chat, yes, Bang will be going through the same offer. Okay. Is there a bonus if I join today? Okay. Yes. I think as I mentioned just now, for options with Friday mentorship, you'll get additional 2 more months of the mentorship access. So instead of 12 months, you get 14 months. Okay. And of course, the best value for if you guys join the ultimate options bundle, not only will you get 14 months to the options with Friday, you'll get 14 months to the OTP as well, starting on 1st January 2026. Okay. So do grab this offer now before it's too late. Yeah. Okay. Will I get reminders for the live webinars? Yes. Since you guys are asking this, okay, I actually showed you guys the Discord channel that you guys have access to. Whenever there's actually a live session that is coming up, we're gonna send a notification via Discord and also email. Okay, so you guys can also see it, and also in the student portal where I showed you just now, you guys actually showed can see the webinar schedule. So to actually mark your calendar for the session as well. But not to worry if you can't attend the live session. Every session is recorded, as I mentioned. Once the replay is uploaded, again, we'll announce it on Discord and you can access the replay in our student portal. Okay. Okay, one more thing. Okay. Okay, I also saw a few of the Wave Friday members who wish to subscribe to OTP. Like, how do they actually subscribe? Not to worry, I think my colleague will actually send the link inside the chat right now. So for those existing Wave Friday members who wish to subscribe to OTP only, you'll have an exclusive offer just for you. So my colleague will actually uh, send the links in the chat right now. So do take a look at it. Yeah. Again, let me reiterate, this offer won't last long. So if you guys are interested to purchase it, do take advantage of it now, because once it's gone, it's difficult for my team as well to actually give you all the bonuses and also the exclusive discounts once the promotion is over. So help us help yourself as well. Yeah. Let me see, is there any other main questions? Yep. Do I have lifetime access to the courses? Yes, as stated inside the screen that I'm actually sharing right now, for those who actually purchase the options Wave Rider mentorship or the Ultimate Options bundle, which you guys have access to the Wave Rider, you'll have lifetime access to the options Iron Shell, Iron Striker 2025 courses on your on-demand. So you will have lifetime access to that, to the courses. Yeah. Like what Adam mentioned just now, if you wish to actually renew for the next following year, because you want to have access to the online mentorship and all, so again, you can actually renew for the second year. and you have access to the mentorship. However, if you did not renew, you won't be having access to the online mentorship for the following year. Okay. Any more questions for me? Yep. Okay, so let me reiterate right now what's the offer that is being shown on screen, which is the options with Rider mentorship. What you have is the lifetime access to the options Iron Shell plus Iron Striker 2025 courses. And on top of that, you will have 1 year access to our online mentorship, which is our onboarding workshop for beginners, then monthly strategy deep dive session, monthly e-gathering plus live trade hunt with Bang Pham Van, the options traders discussion group, and the quarterly trading psychology class with Adam Khoo. And then also will be the best value right now, which is the ultimate options bundle, is being what is inside the bundle is the options with Rider mentorship, what I actually explained to you just now, plus 1 year access to the OTP, where you have real-time trade notifications from Bang. You can see Bang's portfolio tracker, OTP trades, a watch list, live monthly webinar by Bang, and the OTP discussion channel. Yep. So again, let me reiterate, whatever Bang is going to offer is the same also. And if you want to actually grab this offer right now, do grab it quick before it's all gone. I can promise you that the prices being offered in the black market right now is the best offer right now. And also the bonuses that you'll be receiving is also a great value. So do take advantage of it now, yeah? Okay, I think that's about covers the main admin questions that's coming in from Adam's session. I think if, other than that, that should be it. So if you're ready to get started, okay, so quickly scan the QR code and click the link in the chat, okay, so you can actually take advantage of the offer and the bonuses that are being offered to you right now. It's going to be for a limited time only. That's what I can promise you for that. And also, before anyone leaves, stay in the room, because up next, Bang is actually taking over. So he'll be talking about his C to D option strategy profits from AI rallies without the whiplash. So this is the strategy that helped him at plus 26% in 12 months, while most traders got shaken out by the AI volatility. So he'll be showing you how he catches those short pullbacks, right strong uptrends, and avoids the traps that wipe out most of the traders. So if you want to grab a quick drink, do it now. Bang session will be starting up next. Thank you.